he sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
SEBI is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is, actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Hello and welcome. You're watching KYC, which is Know Your Company. Now, today it's a very, very interesting company. In fact, in a very differentiated kind of space, we have Antony Waste Handling Cell, which is of course a listed company, and we'll try and dive deeper into what this company does. As the name suggests, it's in the solid waste management sector. Very far and few in terms of companies. One that I can think of is probably a Ganesha Ecosphere, is one of those in this space, but this is more in the collection and transportation of waste, and 60% of its revenue comes from there, and that's why this one is unique in that sense. It was established in the year 2000. It's a leader in municipal solid waste management. It does mechanical sweeping of roads. If you're living in Bombay, you would have likely seen some of their equipment at play in Bombay, especially more on the southern side of Bombay. It collects and transports waste. It also has a waste to energy division, and they are also into designing, construction, operation and maintenance of integrated waste management facility. There is one that they have, which is the largest waste management facility integrated in Asia, which is in Kanjurmarg in Mumbai. So that's what the company does. Now let's try and break this down a little bit better. What is the capability that the company demonstrates? First, it does door-to-door collection of waste. So waste collection from Mumbaikars, from citizens of Mumbai. It transports it, it segregates it. It also does construction and management of landfills. So it's completely end-to-end in that sense. It does recycling as well, composting as well, and it does waste to energy. Some of the latter of those of the capabilities are valued significantly higher than the former. So while the larger capability that this company has is with regard to door-to-door collection and transportation, but once they start building the latter part of the capability, well, you might well see the possibility of a higher value ascribed to the company and a better visibility that the company will have in the eyes of the investor, because recycling is where a large part of the value addition is, and that's how investors also view some of these companies like a Ganesha Ecosphere and the like in this space. Let's look at revenue mix though. So as I did mention, 62% of the revenue comes from collection, transportation. They have 16 contracts, and their average contract duration is around 8 years. So some amount of visibility with regard to revenue in that sense. Now, in terms of municipal solid waste processing, they do this as well. 23% of the revenue comes from there. It used to be nearly 30%, so that's come off. It includes sorting, segregation, and the average contract duration here is nearly 23 years. And last is other contracts. This includes manual sweeping of roads, sale of goods, sale of scrap, stuff like that. And then there's a very unique design, build, own, operate and transfer projects, which is the DBOOT. They have around 2 to 3 projects that they are working on in that regard as well. So again, interesting niche that they've caught on with regard to this, but that's around 15% odd of revenue. Then they've entered the waste to energy sector with the first plant coming in Maharashtra. The generation capacity is 14 megawatts and it has a waste handling capacity of 1,000 tons per day. It covers pre-processing, composting as well as power generation. The project's tenure is roughly 21 years, started in 2019 all the way to 2040. So again, it's an interesting company in that sense. Everything with regard to waste, it's integrated, and of course it's culled out a niche in 1 or 2 segments in particular. Once they start building the other ones, will be interesting to see how this evolves. So execution will also hold the key with regard to how this company and its prospects play out. But joining me today to break this company down is Varsha. Varsha, thank you so much for joining in. Let me first request you to take us through the income statement and all that's happened with regard to the last 3 to 4 years in terms of numbers.
Sure. Harsh, just speaking in a compounded annual growth terms. So if you see for revenue, in last 3 years, the revenue CAGR has been 23%, while EBITDA has been 16%. Now the difference that you're seeing, because the EBITDA margin, if I were to talk about, has reduced significantly for the company. So for example, in 2020, the EBITDA margin for the company was 30%, which has reduced year on year. So in 21, it was almost 27%, while in 24, it was 23%. And if I were to talk about the 9-month performance for the company, we'll of course explore the reasons, but for 9-month FY25 also, the revenue growth was only 4%, while EBITDA growth was only 3%, and there was negative growth for profit after tax. Now overall, if you see, one reason why there's a mismatch between revenue CAGR and EBITDA CAGR and profit CAGR is margin numbers, which has reduced drastically. Also, if you see why the numbers have reduced, one is the higher depreciation that the company has seen, and also higher interest cost that the company has seen because of the increase in the debt levels. Of course, company is in a major growth phase wherein they are investing a lot, and the revenue to come into the picture will actually take time. And so increase in depreciation and increase in interest cost, are the main reasons why you're seeing some disappointment, when it comes to numbers.
Yeah, absolutely. Before I take it forward, Varsha, I want to quickly also highlight some of the other parameters that we look at, because missed highlighting that. First off, we have the income statement, the balance sheet, cash flow and return ratios, those 4. Then we look at shareholding, street cred, outlook and the valuation picture. Now, valuation will be tricky, but we've tried to do the best we can. Now, in terms of the interest cost, which Varsha was speaking about, we've seen interest rate on their borrowing come down, Varsha, from 12% to sub 10%. But at the same time, the quantum of borrowing has gone up.
Exactly.
And therefore, it's a mixed way to look at it. In terms of capital allocation, it's better to take on debt at lower rates, but at the same time, the debt level has to match, and that's where the balance sheet comes into play. So let's look at that straight off. Your equity share capital largely been flat, and when you're looking at the balance sheet metrics, you're seeing some of those numbers play out. Your cash bank balances at 85 odd crore, and they've been fairly flat in that sense. No real major change with regard to cash and bank balances. Your debt levels have largely remained the same when I'm looking at it FY24 to H1 FY25, but they've seen a sharp increase when I'm looking at it FY21 to FY24, and let me quickly pull that number out for you. your debt level has gone up by nearly 3x when you're looking at it FY21 to FY24. So something to keep your eye out on is that debt level roughly below 500 crore odd at this point. But at the same time, your net debt to equity is at 0.5 times, which is the highest it's been in the last 5 years. FY20, that number was at 0.6 times net debt to equity. Currently, it's at 0.5 times, and it's climbed substantially from the lows of FY21. So that's the other thing you might want to look out for. But largely, it looks like a decentish balance sheet, Varsha. Nothing major to complain about. Of course, how large will the debt expand will be one place that we'll have to keep our eye out on. But for the moment, it's a fairly healthy balance sheet. Net debt to equity being 0.5, not too bad. Right. Why don't you take us to cash flows?
Sure. So if I were to talk about the cash flow, so let's see, in FY21, the net cash flow from operation was almost 112 crore. Till FY24, so it was 140 crore. So 3 years CAGR when it comes to cash flow from operation is 8%. While now also the interesting thing is the next leg of growth for Antony is also their power project, and also so what they're trying to do is they're trying to recycle the debris which you find in the construction sites. So these two projects are actually next leg of growth when it comes to Antony, and for that company is actually investing a lot. So if you see the cash flow from investing, so in FY21 it was negative 33, while in FY24 it's 152 crore. That means company has been investing, and that's the reason if you see the net cash increase or decrease. For in FY21 the net cash was almost 75 crore, while in FY24 it's 22 crore, because company has been investing a lot. Now this is not a bad thing, because overall if you see net cash flow from operation for the company has been healthy. I won't say in a double digit, but it's a healthy net cash flow from operation considering the growth phase that the Antony is into. So overall I would say a kind of good cash flow metrics that the company has, but we have to have a look on whether what the company is investing should actually flow into the financials, because that's the reason why, because we want the EBITDA and PAT number to be in double digit for the company like revenue has been.
Yeah, it's interesting, Varsha, and we'll stick to this slide for a minute more. So the way in which we've kind of broken this company down, we've looked at revenue. We've said revenue growth has been slightly sluggish. EBITDA, the margins are not translating to profit after tax because your interest costs are rising because of rising debt levels. So we've looked at the balance sheet, analyzed that, given it a thumbs up. Thereafter, we've looked at cash flow. Now, in terms of cash flow, it's generating a slightly better cash flow versus FY21, but maybe not doing as good in terms of margins, and therefore the cash flow hasn't gone up significantly. And that also is getting reinvested. So around 152 crore is the cash from investing activities, which has been invested versus the 30 crore number in FY21. A lot of this has also come from debt, which has been used for funding this cash from investing, and therefore your net cash flow change has been very, very low, and therefore you're seeing a negative 34% CAGR on the net cash flow. So that's how all of this has flowed. Now, in terms of this pocket, your cash flow from investing, what holds the key here is the fact that you have to look at your return ratios. If the company is investing in high return areas, then likely your return ratios will be high, and therefore you wouldn't mind this kind of a very high number from cash flow from investing activities. So let's look at the return ratios therefore. And what we'll see as a trend is the return ratios are falling. This is the ROCE trend that has played out in the last 5 years. And when you're looking at ROE metrics, also very similar kind of a structure. You're seeing a bit of a fall, or rather a flattening out in terms of ROEs towards the 13% mark. Now, you want this to actually inch up as the company scales. So maybe this has come off because we've invested, or the company has invested high amounts into capital, right? And maybe that's why this fall. Is this temporary or not? Is there a higher ROC, ROE target going forward is going to hold the key as to whether shareholder returns will continue to flow through and whether this company is looked at more positively in that sense. Right, Varsha?
Yes, absolutely.
Okay, you want to go ahead?
Yeah, so I would actually take, let's, see shareholding pattern for the company. So pretty much, I mean, a decent kind of thing. So promoter holding has not been changed, which is a good thing. FIIs, yes, in March 21, that was almost 28% where FIIs were invested, but that has come down, but not that bad, having 11% of FIIs in your company. But again, the number has been quite drastically come down. Maybe because, in starting when the company was, launching its IPO, there you have lots of FIIs,
yes,
coming
into the company.
Exactly.
Who has exited around 12 to 13%
Exactly.
stake.
So that's one of the reason.
Correct.
Then DIs also has been reduced, but I mean it's fine, okay to have almost 4 to 5% of stake in the company. But public shareholders, of course, has increased after the IPO. So overall, a decent kind of shareholding pattern, not bad. The good thing is the promoters.
Absolutely.
Skin in the game has not been reduced, which is actually important because 46%, according to me, Harsh, is quite low, kind of a stake when it comes to promoters, because we have seen smaller companies have 70 to 75% of stake in the company.
Correct.
And this having 46%, but the good thing is that has not gone down. And
but
it
remember,
shouldn't
Varsha,
go
it's
down.
a capex heavy business.
Yes.
And therefore, the promoters would have to keep diluting because you need to buy trucks, bus, your dumping stations, etc., and all the equipment that goes into some of these recycling as well as waste related functions, and therefore it's also a capex heavy kind of a business.
Got it. But Harsh, below 45, 44, I don't think so investors would be comfortable and wouldn't give that kind of valuation that a company may deserve,
Sure.
just because of this thing.
Sure, but at the moment it's fairly stable, and we'll give them that, and therefore the neutral rating. Of course, FIs have divested, and we've seen a consistent increase in that sense with regard to the in the number of shareholders and public shareholding. We've seen that consistent increase, so that's probably what's driving the stock as well. So therefore a neutral on that count. Let's also quickly look at street cred. Let's quickly run past this now. So street cred, last 6 months, negative 28%, 1 year, plus 10%, 5 years, plus 32%. Nothing substantial in terms of shareholder returns, and therefore you're seeing the kind of rating that we're giving this in terms of street cred. Not exactly the best, but Varsha, what about outlook? What should we expect?
So actually, management has always come out and said that they're gonna do 22 to 24% of CAGR when it comes to revenue, but overall, I would say they've not kind of walked the talk. But okay, I mean, they are now anticipating steady revenue growth of almost 25% CAGR over the next 3 to 5 years. So this is one thing which investors have to keep a track on, that what management is saying, will they do it? And the other important thing which is in this company is the margin. One has to keep track on what the margins will be for the company because of the new projects that they are chipping in. Are those new projects into, are those new projects value-added products or high-margin projects? That one has to look at it. But overall, according to management, in the next couple of quarters should be good, and they are anticipating 25% CAGR growth, which they always say. But somehow they are not able to fulfill that guidance that they've given in the past. But we need to see whether in next 1 year we'll see 20-25% of numbers in financial in terms of financials.
So thumbs up on that count. We'll hope that that lands up playing out. Valuations, let's quickly look at that as well. Currently, the market cap is at 1,530 crore. The revenue is at roughly 900 crore annualized for 9-month FY25 numbers, and therefore at a 25% kind of growth clips, 3-year CAGR. The revenue will be at roughly 1,800 crore in FY28. Margins, they've not given us a guidance, but the lower end has been at 9.7%. We're going to assume a 9% PAT margin, which leaves us with a profit after tax of around 162 crore, and therefore the 3-year forward price to earnings is roughly 9.5 times, and at the same 9% odd PAT margin, the current PE is roughly 16 times. So let's quickly now peruse the ratings. Let's try and sum it all up. There you go, income statement, balance sheet, cash flow and return ratios. Return ratios have fallen quite substantially, especially the ROCE number. Let's also look at the other ones, shareholding, street cred, outlook, as well as valuations. That's how it all stacks up. And on our KYC rating, this one is 4.5 on 8. So that's how it all ends up stacking up. But we have Mr. NG Iyer, the CFO of Anthony Waste Handling Cell, to talk to us about exactly everything that we've tried to break down and discuss. Welcome, Mr. Iyer. Good morning. I want to first ask you the probability of clocking a 25% growth clip, because you haven't done that. You've done 15% over the last 5 years in terms of top line CAGR. Can you do 25%, and what's the comfort like in your view?
Morning, guys. So let me break this into two parts. I mean, when we went to the public in 2021, our turnover was around 400 plus crores. And now for the current financial year, we should be around 900 plus crores. So that's like doubling our revenue in a period which has seen COVID, which has seen slowdown of decision making in the waste management businesses. And that is now coming upstream. Having said that, during these 4 years, we have also built up our system. We were the first company to set up a WTE, that's a waste to energy plant in the state of Maharashtra, with efficiency at record highs of around 76%. That's unheard of in this business. And we will continue to build on that. So the capex intensive phase from 2021 to 2024, which has also seen a slight bit of hit on the return on capital employed, is because of this reason, where the entire capex, let it be for the Kanjur processing plant or for the waste energy plant at Timpri, which handles around 700 TPD, it's been done and dusted. For now, it's a time for us to actually capitalize on these investments. So we see an upward shift coming from our core operating benefits. Also, we have seen new projects coming in which are slightly better margin accretive. We have seen the Navi Mumbai contract coming in recently, which will add to our margins. We are seeing a long-term visibility coming with the order pipeline of around 8,500 crores as we exited December. So that is a kind of executable number that we have today, for which the capital is already done. So we don't see a significant addition to the bottom line of the capital employed phase unless and until we bag a significant large contract. So now our assets need to be built and should generate returns, which should be in line with our last 9-month trend of margins.
Okay, so point taken, your margins will be around 20 to 23%, and I'm talking about EBITDA margins because that's what the range has been over the last 9 months or so. But point taken on that count. But sir, what's the downside risk of revenue? You're saying that revenue growth of 25%, 3 years, very, very likely, or you're saying that there is some bit of gray in that number?
So let me put this with facts. And in the last 9 months, we have been able to work on the Sitco Biomining project. We are back in Navi Mumbai contract, the waste to energy, which was completed 400 days of operations, are all started delivering numbers. Now we have the construction and demolition phase, which started work from September onwards. So that returns will also start coming in from FY26 onwards. So these numbers, backed by the fact that we have an existing pipeline of contracts where the work is going on, gives us decent comfort to achieve this 20 to 25% CAGR numbers. Also, we are seeing an opening up of contracts coming in from states like Andhra Pradesh, Delhi area. You're talking about Maharashtra also coming out with a lot of contracts coming in. That gives us some measured sense of the directional growth organically and through new contracts and new businesses opportunities.
Point taken. What about CAPEX, sir? Where does the CAPEX number go from here, and would you require more debt on your balance sheet going forward, and what number would you go to in terms of net debt to equity? What's the comfort level?
So currently my net debt to equity is around 0.6x. I mean, that's as comfortable for an infrastructure company can get. One. Second is all my projects require CAPEX to be upfront. So it's not an option that I have a 7-year contract where I incur CAPEX in year 1 and again in year 5 and again in year 7. No, my project requires all the money upfront. So the capex that you see is already done for the existing project for which I already signed the LOIs. So if I see incremental debt, that will be coming with new projects that I may bid for. And so my current net debt would be around 390 odd crores. That will improve based on my receivables that's coming in by the end of the month and April onwards. So we are seeing a decent cash flow positions. Liquidity situation is pretty good. We got a triple B plus rated. We got an A minus at my large subsidiary. So our ability to access liquidity for future capital is also good. And the current debt profile is very healthy. And that kind of gives us more than enough comfort to take up large projects going forward.
Right, sir. So my question, very pointed at my last question. 25% top line growth from here will take you from 900 crore revenue to 1800 crore revenue. Your EBITDA margin of 20 to 23%, can it flow down to a PAT margin of 10% or greater? In your view, is that a sustainable number? And therefore, will you land up at around 150 plus crore of PAT in the next 3 years? Is that something that we can reasonably say?
So the plan of the management internally is to, we are in India, so the waste management is a problem that is standing on a face. If I'm not being able to hold on to my market share, then that is something which is something that we need to work hard on. And we feel comfortable that we will be able to hold on to the market share and even build on it, given our strength of operational expertise that we have built in. So growth of 20 to 25% is something that should be achievable over the next 3 to 5 years. EBITDA margin profile will improve to at least in the upper range of 23% given our track record of executing contracts. So we feel 22 to 23% is something that should achieve. CapEx is done, so the interest and depreciation expenses that is seen today is almost capped out for us, maybe incrementally, maybe a couple of percentage here and there, but we see the translation of EBITDA margin to PAT should be in the range of 9 to 11%. That's an internal threshold and our benchmark for us.
Good. Point taken. Thank you so much, sir. It's been a pleasure speaking, pleasure breaking this down as well. Thanks for joining us and giving us that perspective. But with that, we're completely out of time on this edition of KYC. Thanks so much for watching. From Varsha, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side. He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is, actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
guys. This is Markets at 12 and I'm Malika Mishra. Let's take a look at how the markets are currently doing. 1 day to go for Trump's impending tariff announcement on April 2nd. Who will it affect? How will it impact? And will it give a breather to global uncertainties? As we wait to find that out, the Indian stock market seems to be a little apprehensive as the benchmark indices decline from their opening levels. As you can see on your screen, the Nifty 50 is currently down about 1.37%, trading around 23,100 levels, and the 30-pack Sensex is down about 1.5% as well, trading around 76,170 levels. The broader markets seem to be doing a tad bit better, but the stocks in the main indices, as compared to the stocks in the main indices, they are declining as well. As you see, the Nifty Small Cap 250 is down about 0.8% and the Nifty Midcap 150 is down as well. Let's take a look at the main contributors in terms of weightage points to the Nifty 50 index. And when you look at this particular figure, you would see that HDFC Bank is currently adding the most amount of pressure to the index with over 86 odd points. This is equal to the pressure you can see collectively contributed by the next three draggers, which are Infosys, ICICI Bank and also Reliance. We're seeing relatively very less pullers, so to say, with Trent uplifting the index by just around 11 points, 10 points currently, followed by IndusInd Bank, Bajaj Auto and HDFC Life. Let's take a look at the heat map to check the top gainers and losers in the Nifty 50 basket. And you would see we are currently looking at a map that has more reds than greens, definitely. And Bajaj Finserv, Shriram Finance, HDFC Bank, Bajaj Finance, Infosys, HCL Tech, all these stocks are losing. And how? Only a handful of stocks, as you can see, the first row and the two in the next one are gaining. There are stocks like IndusInd Bank, Trent, which is reacting to Stores addition, HDFC Life, Cipla, DRL, that's providing some relief to the main index. Let's quickly catch a glimpse of the sectoral heat map too, and you would see that, oh my God, all the stocks are declining with just one, that is media, somehow gaining close to 1.5%, 1.14%. That's a marginal gain as compared to the amount of declines we're seeing sectorally. And you would see Nifty Realty, IT, Finance, Bank, Pharma, all of these sectors seeing the most amount of pressure at the moment. The advanced decline ratio, as you pull up that, you would see that there are, however, as compared to the amount of pain that we have seen across all our comparisons and figures, you would see the advanced decline ratio seems to be posing a better picture with more advances than declines. However, there is a significant amount of decline, and therefore that makes the market breadth skewed in favor of advances, but also gives the viewer an alert to look at the number of advances and number of declines as well. Let's now briefly look at some stocks that were on our watch list this morning and how are they faring currently. First up, there's Vodafone. That's the biggest story of the day. We will talk about it later as well. The stock is up close to 18% in trade today as the government converts the beleaguered telecom company's AGI dues into equity shares worth 36,950 crore rupees. The second one is Aditya Birla Real Estate. That's down about 1.5%. Some pressure over there because this comes after they announced to sell their paper business to ITC to concentrate on their real estate operations. And now Suzlon Energy is another stock that is sort of declining in trade as well, close to 2% down as the company is currently facing an order decline of order cancellation of close to 300 megawatt. But as I said, let's first address the biggest story of the day. Vodafone Idea has received another lifeline from the government, which has converted almost 37,000 crore worth of spectrum dues into equity. Now, what does this mean for the company? How does this benefit the company? What are the loopholes? My colleague Sumit is joining us to explain us those details.
Well, yes, big news coming in for Vodafone Idea, given the fact that government will be converting dues worth nearly 36,950 crore rupees of Vodafone Idea into equity. Now, this conversion is being done at the face value of 10 rupees, so it might look at a premium given the fact that Vodafone Idea's share prices are trading below its face value, but generally no share issuance can be done below face value, and hence this is also being done at Vodafone Idea's share prices face value of 10 rupees. Now, Vodafone opposed this conversion, government's stake in the company will increase to 49% from 22.6%. Now, what it means for Vodafone Idea, firstly on the positive side, obviously this conversion means that there will be no spectrum installments for at least the next 2 years, that is till FY27. This conversion will also reduce the company's debt by nearly 18% and will also help the company procure the bank debt that it was looking to do for a very long time. Vodafone Idea was looking to get around a bank debt of close to 25,000 crore rupees, and analysts believe that post this conversion this can happen fast and will also aid the company's planned capital expenditure of 55,000 crore rupees till FY27. However, on the negative side, obviously the promoter holding comes down to around 25.5% versus 38.8%. Then this conversion dues also does not include the annual AGI dues, which starts from March 2026 and stands at around 16,500 crore rupees. Now, this amount of 16,500 crore is way higher than the annual cash EBITDA that the company generates, which ranges around 10,000 to 11,000 crore rupees. And this certainly means that the company is still not out of the woods, and there could be further equity dilution even going forward for Vodafone Idea. And this current equity dilution also reduces value of minority stakeholders. So that's also a kind of negative for the minority shareholders at this point of time. Now, what it means for the industry, for Industars, obviously this capex continuity of Vodafone Idea is beneficial for the growth and the cash flow of Industars, and analysts believe that this will lead to more dividend flows also coming in from Industars going forward. And this capital expenditure plans of Vodafone Idea, analysts believe that there is a new tenancy opportunity of nearly 45,000 new tenants coming in from Vodafone Idea on Indus Towers over the next 12 months. Now, when it comes to Airtel and Jio, obviously this continued government support is coming in positive for the telecom sector, and this also means that taking tariff hikes going forward could be much more relatively easy for the sector.
Right, Soumit. So, as you rightly mentioned, while there are a couple of factors that benefit the company Vodafone Idea at the moment through the government's influx and this move of converting its AGR dues into equity shares, there are still a lot of concerns at the moment as well. In fact, we spoke to Balaji Subramaniam. He's the Vice President of Research at IIFL Securities a little earlier today. He tracks the telecom companies very closely, and he said that Vodafone Idea is still far behind from its competitors. Along with that, he also explained why the company actually needs to stop the continuous consumer losses that it is facing. Let's listen into him.
So, the way I look at it is that as far as Vodafone's 4G and 5G networks are concerned, they have a long way to go before they catch up with their peers. So I think the first milestone for the company would be to stem the subscriber loss that they have been witnessing, for the last 5-6 years. So once that comes in, it also boils down to the success ratio in converting their existing 2G users into 4G, because one of the key challenges for this company has been that since their 4G footprint has been significantly lower in terms of population coverage, their existing 2G users, when they want to upgrade, they end up moving out to one of their competitors. So that is something which the company will have to work upon, and for that they will have to quickly roll out the 4G network, especially on the coverage side. Once that happens, we will see that their revenue starts going up. And, the good thing about this industry is that it's a high fixed cost business. So when the revenue starts going up, the incremental margin on those revenues would be around 60-65%. So my sense is that from the cash EBITDA of around 10,000 crores annualized that they are doing today, in the next 2 to 3 years, that can probably move up to 15,000-16,000 crores. So that's a decent increase from where they are today. But as I said, their payments to the government are much higher.
Moving on, Trent is another stock that is quite buzzing in trade today as well, as the share price is up on the back of a healthy stored addition in Q4 of FY25. Let's go across to my colleague Mahima for more details on the same.
Trent is buzzing on the back of its 1,000 store additions so far for Trent, and the store addition remains healthy in Q4 as well. As of Q4 FY25, Trent operated around 248 Westside stores and around 757 Zudio stores. For Westside, the store addition pace is accelerating, and around 10 net stores were added in Q4 and around 12 were added in Q3. Westside store count was up 6.9% YOY for Q4. For Zudio, the net added stores in Q4 stood at 122 stores versus the estimate of Elara Securities at 45 stores, and total store count is up almost 39% YOY. Now, in terms of Elara's view, they've maintained buy with a target price of 8,300. What they're saying is that for Zudio, this has been the strongest expansion in the past 6 quarters. They expect 22 Westside store adds each in FY26 as well as 27 estimates, and this will be a growth of around 8.9% and 8.2% respectively, and they expect 140 net Zudio store additions each in FY26 as well as FY27. So this is the overall view as to how store additions have taken place for Trent and why it's buzzing trade today.
Right, Mahima, thank you so much for that. And now shifting gears to auto sector. Bajaj Auto is in spotlight as the company has reported a 93% spike in its EV segment in the month of March. My colleague Puneet is currently joining us to give us a perspective into the EV sales of the companies that have come in and how Bajaj Auto stands out.
Well, thanks for that. So definitely in focus, the company has reported a 93% growth in its EV two-wheeler sales for the month of March. It's come at roughly about 34,863 units, and that's a sizable jump that the company has taken, and it has been a continuing trend for Bajaj Auto. It's been a very strong year as a whole, FY25 compared to the last year. They had multiple launches as well with the Chetak as well as the new 3S platform that they've migrated to now, metal body as well as helping the EBITDA margins also in a positive aspect. What's also a very interesting trend is Ola Electric reporting a 56% fall in its EV two-wheeler sales in the month of March, and there are 2 key reasons why. Now, the first is that there was a lot of pre-buy in the same month, in the same time last year, essentially in March of 2024 when the FAME 2 scheme was ending in March. So we saw a lot of pre-buy sales of about 50,000 units in that particular month for Ola Electric. And now that there is no kind of incentive schemes, or it has been reduced drastically compared to FAME 2, we're seeing that impact on Ola Electric. But on Ola Electric, there's one more key aspect. That in February, the sales were impacted because of registration problems that the company was facing at that time. And while they've come out with an exchange filing today and mentioned that they are trying to, most of the sales have been now recouped and they've registered all the vehicles, this not reflecting in the numbers, because essentially if you see in January they did about 24,000 odd units that fell to 8,900 in February. So there was a 16,000 gap plus whatever they would have sold in the month of March. So it should have been roughly between 30 to 40,000 units. That's not the case. The company has reported just about 23,000 odd units, and hence that's one of the key concerns for Ola Electric, hence not very reflective. Apart from that, companies like TVS Motors has been continuing its positive momentum of double-digit growth that's coming in again, and the rest such as Ather has also reported a fall largely because of the same reasons that FAME 2 was there last year. So overall, we've seen a big winner in Bajaj Auto in terms of the EV sales essentially, and we're also expecting the company's March sales also sometime today as well.
Right, Puneet. So definitely what you mentioned about Ola Electric furrows eyebrows, but I'd also like to know how March auto sales are looking for other auto majors like Eicher, M&M Tractors. Take us through those figures as well.
Well, essentially for March, there's only 3 companies that have come out with their numbers yet. As you mentioned, Eicher Motors is the first one. They've crossed 1 lakh sales unit again in this particular year, and that's a very sizable number. Expectation was of about 93,000 units. So definitely beating benchmarks there. It's a growth of 34% versus expectation of a 23% growth. And with this, the company has crossed the 10 lakh unit sales for FY25 for the first time in a fiscal year. So that's definitely a big positive. Their stock is also reacting essentially, and it has been a growth driver essentially from Q2 when the company started to focus again on sales growth rather than EBITDA margin. So definitely reflected there. The other ones, Mahindra and Mahindra. Now the company reported for passenger cars a bang-in line of roughly about 48,000 odd units. It's met estimates there. It's a good growth of about 18%. While on the tractor side, it has outperformed expectation. It had reported 34,900 units. Expectation was about 30,300. So definitely beating the growth estimates there. Overall growth has come in at 34%, while something for an escorts as well, growth has come in at 15%, largely in line with what the estimate was about 11,200. So overall, only 3 companies that have come out with the numbers yet for auto sales, but it's a positive for all of them.
Right, so a positive picture overall, and as well as tractor sales outperforming mostly, which is quite reflective of the bigger conversation that we've been having about rural consumption picking up. But HAL is also in focus today as the company bags orders worth over 62,000 crore rupees, and my colleague Anushi is joining us with details of this new order win.
It's a big update that we have seen for Hindustan Aeronautics coming through the weekend. Now what they have done, the Defense Ministry has signed 2 contracts order worth about 62,700 crores. So it's a big update coming for HAL since this is also one of the biggest procurement order that they have received from Ministry of Defense. If you are seeing what is this order for, they have signed a contract for supply of 156 light combat helicopters, Prachand, and this marks, as we mentioned, a single biggest procurement by Ministry of Defense till date. This includes supply of 66 light combat helicopters to Indian Air Force along with 90 light combat helicopters to the Indian Army. In terms of where the execution lies, the supply shall commence from the 3rd year and will be spread out for the next 5 years as well. What stands out along with the kind of big order that the company has received is the order book positioning for FY25, in which they have clocked an order book of 1.84 lakh crore. This is at the end of FY25 figure that we are looking at, which is a 95% of a jump from last year's figure of around 94,000 crore. A couple of new orders that they received over the year include new manufacturing contracts of about 1.02 lakh crore, along with repair and overhaul contracts worth about 17,500 crores. In terms of where the revenue is concerned, now there were a couple of supply chain issues regarding the engines, which the company also came out with an update on Thursday, Friday itself. The revenue was flat at 30,400 crore for the year, but they had faced shortfall in their deliveries of light combat aircraft and advanced light helicopters. This was due to non-availability of engines for LCA and grounding of fleet, which took place in January 2025 due to an accident which occurred for advanced light helicopters. So the revenue on that front has remained flat, but FY26 is a year that the company expects to make a stronger comeback. In terms of the recent updates also, we have seen GE Aerospace delivering about first of 99 F404 engines for the company, which was a significant development. Considering all these, there are a couple of brokerage notes which came out which remain bullish on the stock. This includes UBS on HL, which see a 30% of an upside, and JP Morgan sees a 19% upside on the stock. So this is the overall picture that we are seeing for Hindustan Aeronautics and why it's in focus today.
Right, Anushi. And viewers, an important update that just came a while back is that ahead of the Liberation Day, that's tomorrow, Liberation Day deadline for Trump's tariffs, the US president claims that India may soon drop its tariffs substantially, along with other US allies. Listen into his comment.
I'm not worried about it. I'm not worried about it. Yeah. Mr. President, can I ask, have they a chance of doing better, actually, with the tariffs? It can actually help them in a certain way. And I think a lot of them will drop their tariffs because, they've been unfairly tariffing the United States for years. And if you look at the European Union on cars, the European Union already dropped their tariff down to 2.5%. It was announced a couple of days ago, which is what which is a very small tariff. The United States charged very little. And I think I heard that India just a little while ago is going to be dropping its tariffs very substantially. And I said, why didn't somebody do this a long time ago?
And moving on, ONGC Green is targeting EBITDA of 6,000 crore rupees by 2030, says CEO and ED Sanjay Kumar Mazumdar. While speaking to NDTV Profit, he also highlighted how the acquisition of Ayana Renewables will aid the company's capacity and manpower expansion plan. Listen in.
It's true that it's a newly formed company, just a year old, because this company was formed on 27th of Feb 24. And since then, we have an objective that will reach the 10 gigawatt of renewable energy by 2030. So in a short time, where we are primarily an upstream company, so stepping into the renewable sector, but the capability was not there. So we thought that we'll grow organically as well as inorganically. So inorganically, our focus was that out of this 10 gigawatt, we'll acquire a lion's share from the brownfield acquisitions. And then parallelly, we'll also do the greenfield projects. So Ayana is also one of the efforts in that direction. So Ayana is a big platform, 4.1 gigawatt total. This is including the operational as well as under construction assets. We decided that we'll join hands with NTPC Green. We already had an MOU with NTPC Green, so we formed a JV company with NTPC Green, and together we have 50-50 share in this Ayana renewable.
Got it. In terms of, do you have any revenue targets from Ayana specifically? And will this be the strategy going ahead, getting into acquisitions like you've announced PTC Energy in the past, there's Ayana Renewables which has been completed now. Will this be the strategy going ahead?
But the first question that the total EBITDA that we are targeting from Ayana as of now with this, the projects which are operational as well as under construction, the total EBITDA will be something around 3,300 crore by FY27 when all these projects get operational. And as regard to the acquisition part, we have recently acquired PTC Energy as well, you are aware. That has a portfolio of around 289 megawatt of wind energy. As I said, we will be going both ways, organically as well as inorganically. The acquisition will be one of our strategy. And the reason behind this is the inorganic acquisition quickly add to the capacity. And also when you are acquiring the platforms, you get the capability as well from the existing manpower. But it's not that we'll be going only the brownfield acquisition only. Shortly, we're coming out with a big tender of solar plus battery storage. So another 15 days a month time, that tender will be floated. Again, this is a big capacity, 600 megawatt solar plus 1200 megawatt of battery storage. That will be on the block. So this will be parallel activity. Both the things will go together, hand in hand.
And as a whole, Green as a whole, how much do you expect this venture to contribute to ONGC's consolidated EBITDA a few years down the line?
You were down the line, if you talk about 2030, we are, obviously these are all estimated figures, but definitely we expect to add to around 6,000 crore plus EBITDA in another 3 to 4 year time in ONGC's kitty.
Okay, that's a tall number. And going forward, how will the total capex pie look like? How much do you expect the parent, to infuse in Green? We've had the 3,300 crore infusion for the recent acquisition, 1,200 crores for PTC Energy. So how would it look like for the medium term?
See, as we have already told earlier that ONGC planned to invest around 1 lakh crore in this sector, renewable energy sector, by 2030. But when we say 1 lakh crore, you should keep in mind that it is almost a 75-25 debt equity ratio. So equity infusion will be roughly around 20 to 25,000 in this green sector. As you know that 3,300 crore we have infused for acquisition of Ayana and another 1,200 crore for PTC Energy. So for FY25, we have already taken 4,500 crore. So you can expect the similar amount coming in FY26, if not more.
Okay. And lastly, I know, the company has just started to make, steps in terms of, revenue EBITDA, but you have set a high goal of 6,000 crores by, 2030. Is a potential listing completely, off the books, or would that be something the company would consider a few years down the line?
Let me clarify first the thing that when we said 6,000 crore, that is the EBITDA.
Yeah, okay.
So don't get confused with the PAT because this is upfront high depreciation projects. And now, as I said, I just forgot. Can you repeat the question?
Yeah. Is a potential listing on the books, is that something the company would consider?
So, going ahead, how the companies are getting listed nowadays and the kind of premium people get, there's always a temptation to get listed, to go for the IPO. But as a prudent or a good corporate, we think that it's not only the capacity building that will give confidence to the investors, it's also the capability building. So when we do some of the greenfield projects, which I said in another 15 days time, we'll have a tender getting floated. So if we have got a mix of both brownfield and greenfield, we demonstrate that we can operate is as good as we have been operating oil and gas. So the investor will get confidence that we are not only into the molecules, the brown molecules, we are also into the green electrons, and we can execute the jobs. We can manage the acquired company well. And once that confidence is there into the investors, then we'll definitely come out. Give us a couple of years' time.
Well, viewers, that's all the time we have on this show, but do stay tuned to NDTV Profit for more news and updates.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is, actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome to Profit Buzzers on NDTV Profit. I'm Aditya and with me is Varsha. But first up, let's look at the headlines at this hour. Markets see a sell-off. Benchmarks trade at day's low, Nifty hovering below the 23,200 mark. Sensex nears 76,200.
All sectors barring Nifty Media largely in red. Nifty Realty bears the brunt. IT, pharma and banks under pressure as well.
And auto sales for the month of March start pouring in. Eicher Motors Royal Enfield clock a 34% yearly growth, selling over 1 lakh units. M&M passenger vehicles post a 18% growth.
Vodafone shares soar in trade. This is after government converts almost 37,000 crore worth of spectrum dues into equity.
And a whole host of stocks buzzing on the back of order wins. Powermech, Rights, HBL, all trade with gains. We get you more details on the show. First up, let's quickly take a look at what's happening with regards to where markets go. An interesting start in terms of today's session and taking the handover from the US markets and the way European markets are looking like as well. We're nearly at the day's lowest levels currently. The pressure has continued with cuts of almost 1.2% coming in on Nifty 50, and we are hovering around that 22,200 mark on that front. Let's quickly pull up Bank Nifty on the screens as well, and a whole host of other sectors that will be in focus ahead of the reciprocal tariff announcements that will be coming in tomorrow. Bank Nifty also similar kind of cuts. And what's interesting to see in terms of Bank Nifty is that it's broken that 51,000 mark that the street was actually watching out for. So from here on, where Bank Nifty is headed is a key question that we need to look at. What's holding up? Nifty Media, oil and gas, defense, as well as the PSU Bank Index. These are the ones which are holding up in terms of individual sectors, but the major pressure coming in terms of real estate. Now, what's putting pressure on real estate is the increase in the ready reckoner rate in terms of Maharashtra. What this means is a 3.9% average increase is what we've seen. The last increase happened back then in 2023, and this will increase the absolute number in terms of the stamp duty that is being paid by the consumers. That in turn could individually impact the demand as well with regards to the Maharashtra-based real estate companies. So this is going to be an interesting aspect that NDTV Profit will be covering in detail as well. IT continues to be under pressure. Consumer durables is under pressure. Pharma, ahead of the tariffs, is seeing cuts of almost 1.3% in trade as well. And you have the metal pack, which is also seeing some bit of pressure. So that's with regards to individual sectors. But let's quickly look at the Nifty 50 heat map and see what the individual stocks are doing in trade today, because interesting names are seeing some moves. Trent, a 5% kind of an up move, and this is on the store edition that we've seen in the fourth quarter. We'll have Mahima from the research team who will be getting us further details on that as well. IndusInd Bank is seeing a bounce back in today's session. It was one of the top losers on Friday as well. ONGC is in the positive. You have HDFC Live, Jio Financial Services, Bajaj Auto on the EV sales data that is out is trading in the positive. Adani Enterprises is also in the positive as we speak. Dr. Reddy's and Cipla seeing gains. HDFC Bank, interestingly, is under pressure. Cuts of little over 3% coming in there. Bajaj Finserv trading under pressure. From the IT pack, you have Infosys, HCL Tech, both down in trade. Hindalco, Sun Pharma, Axis Bank, Maruti, these are a few of the big names that have been down and about in trade. Let's quickly up the broader markets as well, Varsha, because clearly the pressure has come in today. We've broken levels that the street was eyeing as support levels in terms of Nifty as well as Bank Nifty as well. Interesting is going to be what the broader markets are doing from here on.
Yes, absolutely, Hiral. And so as always, they are mirroring, benchmark indices. So if you see Nifty Midcap 150 is down, a 0.67%. But let's see, who are the losers when it comes to Midcap 150. You have Ipca Labs, you have Voltas, you have Godrej Industries as well, in the losers list, followed by Oberoi Realty. While gainers, let's pull up Vodafone chart. So one of the top gainers, Vodafone is buzzing as government converts rupees 36,950 crores dues into equity. There you go, Vodafone is up almost 20%. Also, Indus Towers is also buzzing on the same news, and you have IDFC First Bank, you have Metro Brand and Yes Bank, who are the gainers, who are in the gainers when it comes to Nifty Midcap 150. While let's just see what small cap 250 Nifty small cap 250 is doing is down almost 0.3%, and let's see who are the losers when it comes to small cap 250. You have UCO Bank, you have DOMS, you have Reddington and JB Chemicals, who are into the losers bank. There you go. Voltas is also down. Reddington is down almost 5.6%. Suven Pharma is down 5.5%. JB Chemicals is down 5%. Also, let's see what the gainers. So when it comes to gainers, you have Tata, Tele, Vodafone Idea, HLE, Glasscode and RHM, Magnesita, Hiral, which are into the gainers list when it comes to broader markets.
Right, so that's with regards to where broader markets are concerned. But let's quickly look at the real estate sector as a whole. If we can just get a heat map of all the real estate companies that are in focus today, because there is pressure that is mounting in on that front. There you go. Except a Suntec Realty, all of them down in the range of almost 1.5 to 5%. Specifically, Oberoi Realty, Godrej Properties, Macrotech, the ones which are Mumbai focused are actually bearing the brunt in today's day. And this is after the Maharashtra government has gone ahead and hiked the ready reckoner rates for the financial year 2026 by 4.4%. Now, to get you more details on the same as well, overall these rates will be effective from the 1st of April, and the initial speculation had suggested a 10% hike. The last time the rates were hiked was back then in 2023 by an average of around 5%. Overall, if you see in terms of Maharashtra, they've collected almost 57,400 crores in property revenue in FY25, and the collection had exceeded their target of almost 55,000 crores. Now, in terms of the implication of these higher ready reckoner rates is, one, the property costs will increase. Secondly, the stamp duty charges for the buyers will go up as well. Now, that is something which will probably hurt demand. Now, the construction cost will be escalated as well, though the stamp duty percentage remains the same, so it's just the absolute number that will increase. And it's affordable housing that could see a bigger hit. And to be noted that this has been a segment which has been slightly drooling under pressure right now. So again, further hit to this, how big it will be and which companies will be impacted is going to be interesting. You have the percentages in terms of which city has seen what kind of an increase on the screens right now. So it ranges from almost 6.8% to almost 10.2% on an overall basis. And the revised rates also vary, but the average is around 3.7 to 3.9%. In fact, let's also welcome in Ashutosh Limai, Regional Director at Anurok Group, and my colleague Anushi will be joining us on this conversation as well. Ashutosh, good afternoon and welcome to the show. My first question coming to you is, was this something that was warranted? Because I mean, the EV tax that the government has gone away with to an extent, I think somewhere they had to make up for this. So how do you see the impact on an overall basis?
Good afternoon. Well, I think this was expected because the ready reckoner rates were not increased in last 2 years, whereas the market prices for residential in all urban centers, particularly Mumbai metropolitan region, Pune, and other cities of Maharashtra, the residential prices had gone up in last 2 years. So I think it was expected, and the rate with which it has been increased, in my view, is fairly reasonable. The rate of increase of ready reckoner rates is lower than the rate by which the property prices have gone up in last 2 years. So what does it mean? It means that the stamp duty that the buyers have to pay will be more now. But the overall impact, in my view, will not be that high because the market rates were anyway much higher than the ready reckoner rates. So it's more of catching up with the market that has happened.
Hi, this is Anushri joining in. I wanted to also ask you, now the initial expectation was around 10%, but against that we are seeing around a 5% of an increase. So it is, although there is an increase, it's a moderate kind of an increase that we are seeing from last year. So I want to understand from you, what is the overall impact that you see firstly for the developers and also for the consumers which are there, because the major hit which is expected is on the affordable side is what we are seeing. So just wanted to understand your overall take on this.
Yeah, the overall impact, as I said, will not be significant, but for the affordable housing segment, where the buyers are sensitive to the total outflow they have to incur. I don't see property prices getting impacted because of the ready reckoner rate, because they were anyway higher than the ready reckoner rates. For affordable housing, which is typically 40 lakhs, 50 lakhs, up to 80 lakhs, in Mumbai's case, anything which is less than 1 crore, there the sensitivity is higher. But at the same time, other factors such as expected drop in the mortgage rates can balance this out in near future. There are cities which are at the cusp of becoming metros, cities like Nashik, Kolhapur, Solapur, Sambhajinagar. There, the impact could be felt a little bit more because they are more price-sensitive markets. But the big metros, Mumbai, Thane, Navi Mumbai, Pune, I don't see much impact because of this hike.
Okay. So, Ashutosh, from a developer perspective then, are you saying that, I mean, obviously your luxury is something which is not going to be really impacted on the back of this. How are you seeing affordable housing as a segment being impacted? Because that has been a segment which has already been ruling under pressure if you have to compare the three. And if so, which are the kind of companies which might see an impact?
Overall, in the last 2 to 3 years, the activity in affordable housing was dropping steadily. So that is something that one has to address, how to entice and incentivize developers to come back to building more affordable housing. There are other factors such as getting infrastructure ready in the peri-urban areas so that those areas become livable. There are other tax incentives that are available, etc. Merely the ready reckoner rate is not the sole factor governing the future of affordable housing. Having said that, the peri-urban areas of all metros, where the property prices are relatively lower, there one might see a little sensitivity about this ready reckoner rate increase. But from developers' perspective, because in the last 2 years, there was enough demand in the higher ticket sized residential market, many developers moved away from building affordable and they launched more projects in the luxury and mid-range projects. The market dynamics will play out. The market is cyclical. So once equilibrium is reached in the luxury and mid-range residential, developers will focus once again on affordable housing.
So Ashutosh, my question to you is, one, the hike is lower than majority of the predictions that were expected. The key expectation was around 10%. It's way lower than that. But would you say it is significant enough to influence the market trends in the coming months?
No, my view is the hike is not significant enough to reverse any market trend or influence the market in a big way. Had it been 10% or upwards, as some of the industry experts were anticipating, that would have been some sort of an impact. But 4 to 5% increase in urban areas is not going to make a significant difference for the property market.
So Ashutosh, considering now the overall picture that we are seeing for the fourth quarter, now what we have seen in the last couple of months, there have been a lag in terms of where the approvals are concerned, which has led to a slower pace of launches which were there. I want to understand your overall outlook for the fourth quarter for the real estate sector. How are you viewing these trends in terms of where the launches are concerned, where the demand supply trends are, and how this would in fact result to price realizations which are there? Do you expect a higher spillover in the first quarter of FY26? Just want to get your view on the same.
Yes, I think there are factors that prompt us to believe that next 2 or 3 months we will see drop in new launches because the approvals are taking longer. The market dynamics are such that most urban centers have seen a significant price growth in the last 24 months. So we anticipate some sort of a plateauing of pricing that will take place. In the last 2 years, there are a number of projects that got launched. So the supply is substantial. While the demand is steady, one would anticipate that once the equilibrium reaches of demand and supply, it's only after that we will see a surge in launches. Our view is that the prices will be stable or only marginally increase. Fewer launches in the coming quarter, whereas the absorption will be steady.
Right, so that's an interesting take coming in. Thank you, Ashutosh, so much for joining us on the show and sharing your views. Thank you, Anushi, as well for joining us on this conversation. Let me also welcome in Sharmila Joshi. Sharmila, good afternoon and welcome to the show. Your quick take with regards to real estate at the ready reckoner that has been increased as well. How are you seeing the impact?
Well, I think more than the impact of the rate, I think overall what we're hearing is that there is a bit of a slowdown and that we are seeing lesser buying. So now you'll have to actually watch the combined impact of the rates having gone up as well as what you see in terms of sales data for a lot of these companies. So a lot of them have put out very sort of aggressive targets, and I think recently there was also a report that sort of said that I'm sorry if I'm getting the company wrong, but I think it was DLF that the outlook was very positive in terms of the data that they had shared going ahead of what sales would be, etc. So I think I would really be closely watching that because we're already sensing a little bit of a slowdown as far as sales is concerned. And that, along with this hike, how it actually impacts sales numbers is something that you would now be watching because this sector has had a tremendous run-up. And it's a very important sector when you are talking of markets as a whole in terms of the kind of employment it generates and the kind of indicators it gives. It's a very, very important sector. So it needs to be tracked closely. But that said, data over the last couple of months seems to suggest a bit of a slowdown.
Got it. Well, thank you for that. Moving on, let's now address the big story today. Vodafone Idea has received another lifeline from the government, which has converted almost 37,000 crore worth of spectrum dues into equity. What could it mean for VI? Somit has all the details.
Well, yes, a big news coming in for Vodafone Idea given the fact that government will be converting dues worth nearly 36,950 crore rupees of Vodafone Idea into equity. Now this conversion is being done at the face value of 10 rupees, so it might look at a premium given the fact that Vodafone Idea's share prices are trading below its face value, but generally no share issuance can be done below face value, and hence this is also being done at Vodafone Idea's share prices face value of 10 rupees. Now Vodafone opposed this conversion. Government's stake in the company will increase to 49% from 22.6%. Now what it means for Vodafone Idea, firstly on the positive side, obviously this conversion means that there will be no spectrum installments for at least the next 2 years, that is till FY27. This conversion will also reduce the company's debt by nearly 18% and will also help the company procure the bank debt that it was looking to do for a very long time. Vodafone Idea was looking to get around a bank debt of close to 25,000 crore rupees, and analysts believe that post this conversion, this can happen fast and will also aid the company's planned capital expenditure of 55,000 crore rupees till FY27. However, on the negative side, obviously the promoter holding comes down to around 25.5% versus 38.8%. Then this conversion dues also does not include the annual AGR dues, which starts from March 2026 and stands at around 16,500 crore rupees. Now this amount of 16,500 crore is way higher than the annual cash EBITDA that the company generates, which ranges around 10,000 to 11,000 crore rupees. And this certainly means that the company is still not out of the woods, and there could be further equity dilution even going forward for Vodafone Idea. And this current equity dilution also reduces value of minority stakeholders. So that's also a kind of negative for the minority shareholders at this point of time. Now what it means for the industry, for Industars, obviously this capex continuity of Vodafone Idea is beneficial for the growth and the cash flow of Industars, and analysts believe that this will lead to more dividend flows also coming in from Industars going forward. And this capital expenditure plans of Vodafone Idea, analysts believe that there is a new tenancy opportunity of nearly 45,000 new tenants coming in from Vodafone Idea on Indus towers over the next 12 months. Now when it comes to Airtel and Jio, obviously this continued government support is coming in positive for the telecom sector, and this also means that taking tariff hikes going forward could be much more relatively easy for the sector.
Well, thank you so much for all the details. Sharmila, just wanted to have your view on Vodafone. What's your view on that, and also your overall view when it comes to the sector? So, any updates that you can give?
So the sector view is positive. I think what we're really witnessing is that all of us are using our phones for much more than conversations, and a lot of work and other activities have shifted to the phone. We are using data more and more. So overall, where we are in terms of overall, whether it's our population, whether it is the number of people using phones, what we are using phones for, all that I think is likely to only go up. So there is, in terms of sector, very positive on telecom as a sector. Now, I've been negative on Vodafone for the longest time for the simple reason that it's a very capital-intensive sector. And we are seeing that even the companies which you do like, and I do think that the Reliance bit is good, as well as Bharti would be my preferred pick within the space. They have to spend a certain amount of money every year to just stay relevant. You're moving from 3G, 4G, 5G, services have to improve. And for that, you require to be you require to have capital. And here you have a company which is still addressing old issues, and they are not able to get out of the earlier debt that they had built up because of AGR, etc. So all this is fine. In terms of keeping the things going for Vodafone, really conversion into government stake going up, etc. But I don't really view it as a company where I would be comfortable investing in.
Yeah, and what's interesting is the government has picked up the stake at 10 rupees per share, and the stock and the time when the stock is way below the 10 rupees price, right? It started at 6.5, now still at 8.2, so way above the market price. So that's an interesting aspect that we have to consider as well. But today now the stock is up 20%. But moving on, let's pull up two stocks. Karur Vysya, where they've just come up with their business update. So that's the stock that is in focus as well. If you see in terms of Karur Vysya, let's just quickly pull up what the numbers are telling you right now. Total deposits have seen a growth of almost 14 to 15%. Your advances have seen a growth of around 13.5%, and the CASA has seen an uptick of around 2.8%. So that's with regards to where Karur Vysya Bank go. Let's pull up the stock on the screens and see what the counter is doing in trade. And along with this, there you go, 1.8% is the kind of up move. Let's pull up a steel strip wheels as well. I think the highest ever March quarter update is what steel strips has given as well. If you can just pull up that stock on the screens, 3.5 to 4%. Some cooling off has happened on that counter. It rose almost 5% on the back of the business update. And from the auto pack, Atul Auto, let's pull up that one on the screens as well. Total sales, 18% up move is what we've seen on the number. 3,693 units is what Atul Auto has reported so far. If we can just quickly pull up the stock chart, because that will tell you why we are considering that stock as a chart right now at the day's highest levels, with gains of 15% coming in terms of Atul Auto as well. In fact, let me also get in my colleague Puneet to get us the update with regards to the March auto sales data. Puneet, over to you. The companies which have reported so far, what are the numbers indicating in terms of a trend?
Well, essentially for March, there's only 3 companies that have come out with their numbers yet. As you mentioned, Eicher Motors is the first one. They've crossed 1 lakh sales unit again in this particular year, and that's a very sizable number. Expectation was of about 93,000 units, so definitely beating benchmarks there. It's a growth of 34% versus expectation of a 23% growth, and with this the company has crossed the 10 lakh unit sales for FY25 for the first time in a fiscal year. So that's definitely a big positive. Their stock is also reacting essentially, and it has been a growth driver essentially from Q2, when the company started to focus again on sales growth rather than EBITDA margin. So definitely reflected there. The other ones, Mahindra & Mahindra. Now the company reported for passenger cars a bang line of roughly about 48,000 odd units. It's met estimates there. It's a good growth of about 18%. While on the tractor side, it has outperformed expectation. It had reported 34,900 units. Expectation was about 30,300. So definitely beating the growth estimates there. Overall growth has come in at 34%, while something for an escorts as well, growth has come in at 15%, largely in line with what the estimate was about 11,200. So overall, only 3 companies that have come out with the numbers yet for auto sales, but it's a positive for all of them.
So that's a positive one coming in terms of the ones that have been reported. But overall, the expectation was that you would be ending FY25 on a slow note. If you talk about the other ones which have not reported, two-wheelers, the key thing that we were supposed to watch out for was with regards to where the export data goes of the two-wheeler companies. And in terms of absolute numbers, you have Bajaj Auto, which is expected to see a growth of around 5.5%. TVS was expected to see a degrowth, whereas Hero Moto a 28% month-on-month growth. So these are 3 numbers that we should be watching out for. If you talk about the passenger vehicle segment as well, the pressure was coming in on the sales. This was only on the back of the discounts, which were absolutely high, as well as the kind of inventory that the passenger vehicle companies have been sitting on the back of which, if you see in terms of growth, absolute flattish. It was only Hyundai which was seeing a 3% month-on-month growth, but on a year-on-year basis, both Hyundai and Tata Motors were seeing expected to see a decline. So let's see what the numbers come in overall. And in terms of the CV, the bus was in the growth phase. Trucks have been something which have been lagging as well. And tractors, the sentiment has been positive, but yes, there has been an inventory build-up. So Ashok Leyland, Eicher VCV and Tata Motors CV are the ones that we have been tracking. Sharmila, auto sales numbers as well as the kind of update that Atul Auto has come up with. An interesting name. What is your view?
There are 2 pieces I like within the auto space. One is electric buses, the other is electric two-wheelers. Because I think that especially two-wheelers are making inroads in smaller cities and towns far faster than we can imagine. So I think all our 3 two-wheeler companies have an exposure to electric two-wheelers. There, I think, purely on a valuation perspective, I like Hero Motors best at this point in time. Because the last year was a sort of a slightly indifferent year for them in terms of numbers, but I think things will now begin to improve, and there will be a sort of a catch-up in terms of valuations. Maybe 2 years back it was TVS Motors which I liked best, but now I think it is Hero Motors which I think at this valuation to me looks poised the best. And then coming to electric buses, as I said, because a lot of state governments have sort of said that they would like to see buses getting replaced by electric buses, your diesel and CNG buses getting replaced by electric buses, and we have seen that move already. So I think Ashok Leyland to me stands out as a good stock within that space. So you were alluding to that the slow start, and I think that's what we are likely to witness as far as passenger vehicles is concerned. But as I said, these are the 2 bits that I like, and overall I think we all know that the sector is sort of impacted by this whole tariff news data and how that is going to impact the companies, especially who have export exposure. And I think negative obviously for Tata Motors and so on, and what the coming of Tesla could mean for electric vehicle makers. But that said, these are the 2 bits that I continue to like, and these would be the companies.
Got it. Well, from auto to let's move our focus to energy, wherein Suzlon Energy has announced that its order book has shrunk by 300 megawatt due to order cancellation and reductions. Mika joins us with the details of the same and what would be the potential of financial impact of this negative development. Mika.
Yeah. So we've seen 300 megawatts of orders cancelled or reduced. In terms of order cancellations, there's a 99 megawatt order from Vibrant Energy which has been cancelled, as well as a 100.8 megawatt order from a leading global utility. These orders were received by the company in May and December of 2023 respectively and have been cancelled because the companies have decided not to go ahead with the projects. In terms of order size reduction, well, there was a 201.6 megawatt order from O2 Power which was first announced in August of 2023, which has now been reduced by 50% to 100.8 megawatts, and now it will be executed in the name of Solarlight Power instead of another subsidiary earlier before. In terms of their new order book position, the order book size has shrunk by 300 megawatts. As per the company, their current order book stands at 5,622 megawatts versus 5,523 megawatts in January. However, this includes any new orders that the company has received in Q4, as well as the cancellations, but also the Q4 deliveries, which are the orders that have been delivered during the quarter, but it's yet to be revealed. So, as per analyst assumptions and all of that, so if we take an order assuming Q4 deliveries at around 503 to 523 megawatts, the order book net of the deliveries that have been dispatched in Q4 comes around 5,100 megawatts. In terms of the financial impact, where the order book has shrunk by 300 megawatts, as per management who has indicated before that the company on average earns 6 crores per megawatt of order executed, so that implies a potential revenue potential loss of 1,800 crores.
Thank you, Mika, for all the details. Sharmila, so we all know that once company gets, order, stock price jumps, and then it is important to look at whether there are no cancellations and how the company is doing execution when it comes to order book. So just want to have your view on Suzlon. What do you think of this announcement, and would you recommend a buy or sell?
So obviously the news is not very good news for whatever reasons, whether you have reduced your an order or cancelled, put things on hold. I think it would also be interesting to see if this is a continuing trend, in the sense that are you getting a sense that more and more companies are holding back from these kind of orders, because I think that possibly could impact the company more going ahead than what we have just heard, because per se, the order book size sounds fairly decent going into this year, and if things were to fall back into line for them, then you would just see things sort of pick up from where they are at this point in time. And in terms of stock price, it has corrected quite a bit. We've seen that deep correction across a whole host of mid caps and small caps, and we've had a huge correction in Suzlon from, I think, 80 plus levels to current 55 levels. So from a valuation perspective, it looks okay, but the news is not good, and you need to track, as I said, to see whether this is a trend that sort of continues in the coming quarters. If this is an indication of sort of deeper trouble that is there in the system. So that is the only negative. Otherwise, in terms of price and valuation of the stock and order book, the stock looks fairly okay.
All right, so valuations look fair. Well, on that note, let's take a short break, viewers. Don't go anywhere and stay tuned to NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is, actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
Welcome back. You're watching Profit Buzzers. Let's quickly pull up a Transrail light on the screens, a company which has a market cap of around 6,500 odd crores. The stock is seeing gains of around 5%, and this is on the back of an order win worth almost 240 odd crores, and this is in the transmission and distribution segment. Interesting name that we have been watching out for in trade. I'm not sure how the volumes are and what's the participation, but Sharmila, very quickly, any view with regards to Transrail lighting? 240 odd crores is the kind of order win that they are seeing, and this order has incidentally come on the last day of FY25, where they witnessed the highest order inflows of almost around 9,400 odd crores in the year, which is more than double of the previous year, is what the management has indicated as well. Any view?
Not really. This is a recent listing, so we need to watch it from that perspective as well. In terms of valuations, it looks okay. The sector again is okay. So I think just put it on, watch it for a bit before you really think of investing.
Right. In fact, let me also get in Vikas Jain as well to give his view. Vikas, welcome to the show. My first question is, I know it's a recent, good afternoon. It's a recent listing, but anything that the charts are indicating with a Transrail?
So if you look at from the recent listings, this stock has done pretty well. And no doubt with the subsequent order wins, we believe the stock would continue to see strong amount of performance. So on the higher side, we expect that the stock can move further near to 525, 530 levels, which was the previous swing high. So 525, 530 could be expected over the next few weeks.
Should be the stop loss on this one?
So from the stop loss perspective, as the stock is already up by 4-5% in today's trade. So from today's low would be this stop loss.
Right. So
near to 458.
Got it. Moving on, you have Aditya Birla Real Estate that has announced the sale of its pulp and paper business to ITC for 3,498 crores, and this is a part of its strategy to focus on the property business. It's interesting for AB Real Estate as well because the deal size is pretty long, but let's also understand from Anushi, what are the key highlights from this takeover. Anushi, over to you.
Let's divide this into two segments. One is what does this mean for Aditya Birla Real Estate, along with what does this mean for ITC. Now, what essentially has happened is ITC is to acquire pulp and paper business of Aditya Birla Real Estate, and this is for a consideration of 3,500 crore on a slump sale basis that we are looking at. If you look at Aditya Birla Real Estate's total manufacturing capacity, that stands at about 4.8 lakh tons per annum. So with this, ITC's capacity is set to increase to by 60% is something what we are seeing. What does does this mean for Aditya Birla Real Estate now in terms of if we take the segment contribution of the pulp and paper segment, AB Realty revenue, if you are seeing 3,375 crore in FY24, which is almost more than 93% of their revenue on a standalone basis is what we are seeing. ITC revenue from this is 8,344 crore. So considering this 3,375 crore, the expectation is for a 500 crore of a mark in terms of where the EBITDA is concerned. So this is supposed to be EPS accretive for ITC from year one itself. And what does this mean for AB Realty? Firstly, it's the major focus we have seen in the last 1.5 years is on the real estate side of the business. So real estate, higher focus there. This would also aid with the kind of consideration that they're getting. This would also aid for the company's ongoing plans of land acquisition opportunities. So that is a likely factor, along with some debt reduction likely on the cards. If we look at the total net debt, that stood at about 4,300 crore as of the September 24 figure that we are looking at. Along with that, we could also now focus on the capex for the business. Now, if you look at the capex, they had been delayed due to the cash flow impact which was there from this pulp and paper segment. So capex now being on the forefront, along with some focus on real estate, is beneficial. Just quickly talking about what does this mean for ITC. This will increase ITC's paper capacity by 60%. With this, they'll be targeting 30 to 40% increase in EBITDA per ton, and they are also expecting higher teens ROC on investments in the medium term. So this is the overall breakdown for what this development means for AB Real Estate and what does this mean for ITC Limited.
Well, thank you Anushi for all the details. Sharmila, so two stocks in focus there. One is Aditya Birla, wherein this will actually help management to focus on their realty business, and of course for ITC, if you see, they're targeting 30 to 40% increase in EBITDA per ton and also expecting a high teens ROC. So your views when it comes to both of these companies, Aditya Birla and of course ITC?
Overall, it's not a very significant development according to me. I think it's a part of a business they are selling. And what Aditya Birla let's talk of real estate first. What it aims to do, I think you continue to need to track how they deliver on their real estate business. And yes, this will reduce their debt to some extent. But honestly, I mean, when you're a real estate company, this is sort of an ongoing process where you're looking for land deals, maybe getting into some debt, and then when delivery happens, and so on and so forth. So it's a cycle, but yes, this will go towards reducing debt to that level. And I think even in the ITC, it is EPS active as we heard from year one. But overall, looking at the various businesses that ITC is in and what paper forms a part of it, and obviously their biggest business is cigarettes too, even as we speak. So, and they are in so many businesses. They've just separated hotels, but otherwise we know that they are in, for instance, they're in IT, they're in foods, agro products. So they're in a whole host of businesses. So even from that perspective, it's a positive, but not a very big positive. So yes, I mean, it's something that both companies sort of wanted, and they've done it. And then you have to just look at it from a valuation perspective and move on. And from that aspect, if you ask me, I prefer ITC at this point than Aditya Birla Real Estate.
Got it. Well, Vikas, I'll just ask you about the technical aspects for ITC. So, how are the charts looking when it comes to ITC?
So if you look at ITC, the stock has been pretty holding compared to the major fall into the markets, what we have been witnessing through. No doubt the stock has also not seen any major up move. So it's consolidating between this band of around 395 to 410, 415 levels. So 390.95 is a good support area. But on the higher side, the stock needs a consistent breakout above 415, 418 levels. So that crossover would give a sustained amount of up move to 435, 440. So it's a buy. But again, the breakout has to come above 415.
A breakout about 415 a must with regards to where ITC is concerned. But moving on, a whole host of stocks that are buzzing on the back of an order win. HBL is the key highlight. You have L&T Tech as well. Why L&T Tech is important? Because it's one of the biggest deals that we've seen, and in a somber environment when the mood check with regards to IT players is slightly, bitter. RITES is another one, as well as PowerMech. I have my colleague Mahima who joins us to get the details. Mahima, over to you.
Right, so I'll start with PowerMech. It's secured 2 orders, in the past 3 days. One order is from National Highway Authorities of India, and this is for 4-laning bypass in Jharkhand. This is valued at 972 crore, and the execution timeline for this is 24 odd months. The second is from Mirzapur Thermal Energy, where the order is for civil works and structural steel erection. In terms of the total order value, it stands at around 425 crore, and in terms of order execution timeline, it's at 30 months. The next one, in terms of the order book position for something like a PowerMech, the overall order secured as of December 2025 stands at around 4,200 odd crores, and the backlog is pretty big. It stands at around 57,900 odd crores. In terms of rights, there were 2 letters of award received by this particular counter. One was from Oil India Limited. This was for Workman Housing Complex, and this needs to be completed in the next 36 months. The order value stands at 157 crore. The next LOA was from the Numaligara Refinery Limited. The contract for railway sidings at several locations, and project needs to be completed in the next 24 months. The value is at around 155 odd crores. The HBL that Hiral you were talking about is also in focus, and this is because it's received a 1,522 crore order for locomotive Kavach in December 2024 so far. In terms of other order wins, it also received a 410 crore order for tracks in Kavach, that was in Feb, 148 crore as of 4th of March, 500 crore as of 28th of March, and 763 crore as of 31st March. Now, why this entire timeline of order wins is important is because so far the kind of order wins that they've received with respect to Kavach in the past 3 to 4 months total to around 3,343 crores, which is significantly higher than their trailing 12 months revenue of around 2,102 crores. And lastly, L&T Tech, well, it's won a 50 million euro order win, and this is for transformational deal in mobility segment in Europe. This will focus on development of next generation software platforms, and they are tailored to both current as well as upcoming vehicle models. This is the largest ever deal booking in Q3 FY25, and the overall CC revenue guidance is nearly 10%, and medium-term outlook is $2 billion revenue and EBIT margin of around 17 to 18% for this particular counter. So these are some of the stocks that are definitely buzzing on the back of order wins.
Right. Thank you so much, Mahima, for getting us the details. Vikas, 2 stocks that I want to take with you is, the stocks which are not really reacting too much on the back of this news, but one is a PowerMech, which is absolutely flat right now, but a strong move did come in on that one. And secondly is RITES. What are charts indicating for both these counters?
So PowerMech, if you look at, the stock has done pretty well over the past 2 to 3 weeks. So it has witnessed strong amount of volumes and price breakout. So we believe the news has been priced in what the name came in through, because the order announcement came in through. We saw a sharp amount of up move, and now it's been consolidating near the 200-day average. So some amount of price momentum and consolidation is need to be required after a stepuric move from the lower part of the range of around 2100, 2200 levels. So we believe some consolidation and retracement, anything near to 2450, 2500 would be an ideal point to enter to the name.
Right. So that's with regards to PowerMech as well. Sharmila, let me take the other 2 questions with you. HBL Engineering. I was just talking to Varsha right now, where she was indicating that in terms of FY25, the year in terms of the revenue is expected to be flat, but on the back of the Kavach orders, which will start coming in FY26, that is expected to be a strong year. So if you have to look at valuations, do you think HBL is a good investment bet at the current juncture? And secondly, in terms of LTTS as well, which is L&T Technology, the kind of order win that they've got in the automotive space, when the mood on the street in the global markets is also pretty weak, it's an interesting timing, right? So what would your view be on both these stocks from different sectors?
To talk of LTTS first, I think that's a stock that I like, and even at this valuation, and this news is important, especially really because of the factors that you mentioned, because it's an interesting time that it's come. And if you look at its valuations, how the stock is poised, etc., I think this would be a great time to be sort of looking at L&D Tech. Coming to HBL, yes, while the news is good in terms of Kavach, this again has sort of important given the fact that we've had a couple of very unfortunate large rail accidents, and then there was always talk that this system that you would see more orders coming in this on this front and things would be put in place. So from that perspective, it's interesting. My only thing is that when you see government orders, while they are big and they are significant, for the profits to come to your bottom line take a long time because these are very long gestation orders. So from that perspective, it's interesting. But as I said, between the two stocks, I would prefer LTTS.
All right. Well, moving on, speaking of the order wins, HAL is in focus, up about 2.5%. This as the company bags over 62,000 crore orders. Now, Anushi is back with us with more details.
It's a big update that we have seen for Hindustan Aeronautics coming through the weekend. Now what they have done, the Defense Ministry has signed 2 contracts order worth about 62,700 crores. So it's a big update coming for HAL since this is also one of the biggest procurement order that they have received from Ministry of Defense. If you are seeing what is this order for, they have signed a contract for supply of 156 light combat helicopters, Prashant, and this marks, as we mentioned, a single biggest procurement by Ministry of Defense till date. This includes supply of 66 light combat helicopters to Indian Air Force along with 90 light combat helicopters to the Indian Army. In terms of where the execution lies, the supply shall commence from the 3rd year and will be spread out for the next 5 years as well. What stands out along with the kind of big order that the company has received is the order book positioning for FY25, in which they have clocked an order book of 1.84 lakh crore. This is at the end of FY25 figure that we are looking at, which is a 95% of a jump from last year's figure of around 94,000 crore. A couple of new orders that they received over the year include new manufacturing contracts of about 1.02 lakh crore, along with repair and overhaul contracts worth about 17,500 crores. In terms of where the revenue is concerned, now there were a couple of supply chain issues regarding the engines, which the company also came out with an update on Thursday, Friday itself. The revenue was flat at 30,400 crore for the year, but they had faced shortfall in their deliveries of light combat aircraft and advanced light helicopters. This was due to non-availability of engines for LCA and grounding of fleet, which took place in January 2025 due to an accident which occurred for advanced light helicopters. So the revenue on that front has remained flat, but FY26 is a year that the company expects to make a stronger comeback. In terms of the recent updates also, we have seen GE Aerospace delivering about first of 99 F404 engines for the company, which was a significant development. Considering all these, there are a couple of brokerage notes which came out which remain bullish on the stock. This includes UBS on HL, which see a 30% of an upside, and JP Morgan sees a 19% upside on the stock. So this is the overall picture that we are seeing for Hindustan Aeronautics and why it's in focus today.
Right, that's an interesting one. In fact, the stock has cooled off, but if you see the the 2025 chart, that will give you an interesting picture of how the stock price has moved in the last 1 year. I mean, that's the intraday one, but let's just pull up. There you go. It's just 25%. The kind of peak, from the peak, the way it fell, and now the recovery that's coming in is pretty strong. And defense has been leading the gains as well so far. But just before I go to Sharmila and Vikas in terms of HAL, let's just quickly pull up a TVS Motors. The domestic two-wheeler sales are up around 14%. The numbers have just come in there. Total motorcycle sales have seen a growth of around 15% at 1.9 lakh units. That's the number that we're picking up with regards to where TVS Motors goes. The stock not seeing major reaction, 0.3% higher as we speak, but clearly a 13% number. The numbers are slightly above what the street was estimating. The estimates were around of 3.79. The total number has come in at around 4 lakh crores. So that number is a strong one as compared to what the street was watching out for. Vikas, let me come to you with the HAL. With the way the charts are indicating, how would you look at it? Would you advise now investing on a HAL?
So I would recommend to wait for some time being, because if you look at from this whole reversal of what March month we witnessed a secular amount of up move of more than 27-28% HL from the lows of 3,400 odd levels. Today the stock tested its 200-day average and witnessing some amount of reversal from the higher part of the range. Even if you look at the today's day average, the average is near to 43.50 and the stock is trading lower to 2.5% from the weighted price. So a good amount of supply has been absorbed into the higher names, high price. So we believe so stock would retrace back near to 4,050 for 39.50 odd levels, which would be an ideal point and which coincides with the 100-day average. So 39.50 to 4,050 should be a good price to enter.
Right, so that's with regards to HAL. Sharmila, a quick view with regards to where HAL goes and the way the defense pack has been bucking the trend recently.
Yes, I think that's the theme that you need to play on. While that theme continues, one of the preferred plays within that space would definitely be HAL. And now this order win really just adds wings to that. But you have to be, I think, a little circumspect because I think that this is a sort of more of a thematic play than an individual stock preference, because once again these are long gestation orders, and for them to really reflect in profitability takes time. So while the order book sounds very good and all that, if the entire if the entire sector is moving up, then you should this would be the stock that you should be.
Well, moving on, the Union Cabinet approved a production-linked incentive, that is PLI scheme, for passive or non-semiconductor electronics components with an outlay of almost 23,000 crores. How does this work and who will benefit the most? My colleague Puneet joins in with the details.
Well, thanks for that. It's a big scheme that's been announced for the PLI components specifically. And why is this important? It had been in the news over the last couple of quarters. Now, there's already a PLI electronics scheme that is there, which gives the benefit for manufacturing of electronics. The government has taken a step further, and now you will be eligible for getting incentives even for manufacturing those said components. Now, the EMS players are set to benefit the most from this particular scheme. We have seen, stocks like Dixon Tech, Keynes Technologies, Amber Enterprises, Sirma on the other hand will also get benefited from this. Now, with the total investment that's expected from this, roughly almost 59,000 crores. So companies will have to invest this kind of amount for the whole, of course, to get the subsidy of about 22,000 odd crores. So definitely a big benefit for all EMS players there. This is of course a 3-tier structure to this particular scheme. The first one is of course employee linked. The number of employees you get, you will get an incentive for that. The other one is the total capex you do, and finally in terms of the amount of revenue that will do, and since each component is separate, it will be categorized in this aspect. When you look at the players which will get benefit, Dixon Technologies is the first one. Now, they are of course already investing in the display modules, which is expected to come in Q3 of FY26, and they will be beneficial for this because they're already investing into this particular array. Apart from that, Keynes Tech has already invested and announced investments in the PCB board facility, which is expected to come on stream in FY28. So another big beneficiary there, as well as something like an Amber and Sirma will also be benefited because they are already present in the PCB board space. So overall, these are some of the key companies that will be something to watch out for. There's also PLI on supply chain, so the other EMS players will also be benefited from this going forward.
Right. Thank you so much, Puneet, for that. Sharmila, just one question on Spark, wherein they have submitted application for a therapy to treat tumors. Stock is down 33% in the last 6 months. Are you tracking, and your view on the same?
So, the difficulty with this stock is precisely what you sort of alluded to, that when you have certain developments, you will see it moving up in a block, and otherwise it sort of tends to correct. So that is the thing that I would be circumspect on. But otherwise, it's a good stock. But it is, they sort of go from one big news to another, and in between they sort of seem to do nothing.
Right. Well, thank you so much, Sharmila and Vikas, for joining this conversation. Great to have you. And viewers, this is all we have on the show. Stay tuned to NDTV Profit.
he sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is, actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Welcome, you're watching The Big Question. I'm Tamanna Inamdar. Troubled telecom service provider Vodafone Idea has been extended yet another lifeline by the government. The government has agreed to pick up more stake in the debt-laden telecom operator in lieu of spectrum auction dues. The government has now agreed to convert 36,950 crore rupees of what Vodafone Idea owed it in terms of spectrum dues into equity. The shares will be issued at a face value of 10 rupees a piece, which is, by the way, more than the last closing price of the share in the stock market at 6.8 rupees. Today, however, the share has surged by 10%. Following the conversion of equity shares, the government's share in the beleaguered company will increase from 22.6% to nearly 49%, making the government the single largest shareholder. However, it's being maintained that the promoters will continue to have operational control of the company. In return, Vodafone Idea gets a 2-year breather on spectrum payments and an 18% reduction in its debt burden. But does this bailout signal a fresh start for Vodafone Idea, or is it a temporary lifeline? Or is it, as one brokerage firm described it this morning, a band-aid? Well, the company still faces AGR dues of 16,500 crores annually starting from 2026 March, a burden its current EBITDA of 10,000 to 11,000 crores per year can barely support. Apart from this, the promoter holdings would now have shrunk from close to 39% to about 25.5%, as will the minority shareholders, who will take a hit due to the equity dilution. So the big question really we're asking today is twofold. One, can the government's second lifeline finally save Vodafone Idea? And two, beyond a point, is this an idea worth saving? To speak more on this, I'm joined by Sanjay Kapoor, former CEO Bharti Airtel and former chairman of Micromax. I'm speaking today with Dr. Satya N. Gupta, ex-principal advisor at TRAI. We'll also be speaking with Prashant Singhal, markets leader and telecommunication leader at EY India. Welcome to all of you and thank you so much. Let me start the conversation with Mr. Sanjay Kapoor. Mr. Kapoor, let's start with the last question first. Is this an idea worth saving?
Let me try and peel the onion a bit for you. Absolutely, if you look at this move, it is not about the numbers. It is not about government's 49 or the promoters coming down below 26. It is about keeping VIL a going concern, because apparently that's the right thing to do for such a large market where there should be at least an oligopoly to serve the market and the customers so that they have adequate choices. Now, the question for various shareholders that has emerged out of this, first and foremost, is this enough for VIL? The answer, like you said, what about the AGR dues and the current accruals from EBITDA that VIL gets are not going to be sufficient to fund that outflow that will come up from 26 March. But the fact is, they need to survive today to be relevant tomorrow. And that happens because with this respite that they get, their outflows required in the immediate future are less. And therefore, they can borrow more money from the market to pump into their capex, which is required to be competitive in the marketplace. So from their perspective, for now, to fund their capex and be competitive, I think it's the right thing, and that's what they were hoping for. But this doesn't have ramifications only for them. It has ramifications for Indus Towers, for example, which was probably discounted on its multiples because of the uncertainty around VIL. But I think with this, a little more certainty coming in, their discounting should go down. Plus, if the capex really gets spent, then the number of tenancies and the number of towers will go up. So really, Indus Tower becomes better off than what they were yesterday. Now, the last stakeholder, which is the two competitors, Airtel and Jio, I think for them also this move is positive rather than negative. Simple reason, a weak VIL will always resort to price cutting, but a stronger VIL will compete in the market with spending more capex to become competitive and offer better value and experience to the customers. So I think it's good for them also that they are not treading down the price discounting route. So I think for now, and now considering what's happening globally, the third and the fourth largest players anywhere in the world, even in high ARPU markets, have stretched balance sheets because the technology and the longevity of the technology has shrunk and the capital cycles have increased. Under those circumstances, the third and the fourth operator anywhere in the world is anyway under stress. So Vodafone Idea is not an exception. And being a distant third or fourth player puts you to a big disadvantage. So are they out of the woods? Answer is no.
Okay, so one quick follow-up, and the use of one word in your response that I found interesting, Mr. Kapoor, is apparently. And you said that in the context of apparently in a market this large, you shouldn't have a duopoly. Let's dwell on that, because that's at the end of the day, the numbers may be what it is. We can ask that why has this been converted to equity at 10 rupees a share, etc. All of those questions can come. The core issue is that do you want India to have just two large players? And what are your thoughts on that?
So I think the most important stakeholder in telecommunications today is the customer. Because this service is no more about making calls and surfing through internet. It is about living your lives around the services and the peripheries that get created by the telecom service providers and the whole ecosystem of security, storage, applications, content, etc., etc. Now, if that is a reality, then for the customer, there can be nothing better than having choices, right? Otherwise, the service providers tend to become more greedy. They tend to become lesser worried about the grade of service. And this has been seen in many parts of the world. I'm not saying this will apply to the Indian scenario, but there is a precedence on this in other parts of the world. So I think from a straight consumer perspective and government perspective, to see that government is doing the right thing, it is better to have at least an oligopoly in a country this size. But economics don't get governed by what you want. And today the economics, because of the shortening technology life cycle and with increased capital cycles for this business, because you're pumping in money all the time, it has become very difficult for smaller balance sheets to compete with the bigger ones.
Yeah. Dr. Satya Gupta, let me come to you on this point. There are two ways of looking at it. One is, did Vodafone Idea deserve this cash infusion? And will it be enough? Let me start with the will it be enough part of it.
Yeah, thank you, Tamanna ji. Actually, when you talk of will it be enough, actually there is a saying, you can never have enough of two things. One is called money and other is called bandwidth. So it is not enough, at least. And I'll tell you why it is not enough. Because the government on their part have done the money part of it. Actually, they have to basically do more than that. It's a public-private partnership where money is just one resource you bring to the table. Then you have to bring other skills also, other expertise also, or other kinds also. Like what I'm unable to understand, why government is also not coming to the board. Though they say we are not in the business of running the business, but at the board level, first, they deserve it now with 49%. Actually, anything beyond 26%, you have to have a seat on the board for the accountability purpose, for seeing where your money is going, and also helping the investee company to make best use of it so that they succeed. So this is one point which have to be considered by the government. They have to get on the board. If they find they don't have the enough skill, they can hire, they can outsource, or they can nominate some independent director from the best brains of the country. Actually, a lot of people have lived telecom, like few in your own panel now, and those kind of expertise from the country have to be brought on the board as the nominee of the government if they don't want to nominate themselves. But they have a right, they have an obligation, they have accountability to do that. So that means money alone is not enough, of course.
Yeah.
So that is one thing. As far as AGR thing is there, those dues are also staring at the face of it. But with this positivity, with this, you can say, cleaning of the balance sheet, reduction in the debt, you can now use other tools of getting the money in the company. One of the tools which everyone else has used is called InvIT, Infrastructure Investment Trust mode. You should go for that now, actually, and you can get a lot of money actually in the company without losing the control. The beauty of InvIT is there. Our other telcos have made use of this tool, and other infrastructure. NHAI have made use of this tool. Power Grid, Starlight Grid have made use of all over the world. InvIT, it is a SEBI approved scheme, so you can get more money. In addition, in any case, with this cleaning up of the balance sheet, you will get that debt, what you have been trying for last 2 years, that 25,000 crore of rupees you can get, and you can even attract ECB there, actually a cheaper kind of debt, what I will call. Now we have gift that Gujarat information financial township actually.
Right.
So you go there.
So there are options. There are options is the point being made. Prashant Singhal, let me ask you about that. Why should anyone invest in Vodafone right now with the government owning 49%? The people who are running it, but then they've been trying to run it and move it out of this situation for a while. What is the case for investment in Vodafone, either from a large investor or from a shareholder perspective?
Yeah, I mean, I think the important thing is that from a sector standpoint, and that obviously applies to Vodafone, that till such time you get your regulatory levies realistic. I mean, as we know, India is today still the most taxed sector when it comes to AGR, when it comes to GST. And the entire GST, I think Sanjay made that point, that with the amount of capital inflow which is required in the sector, there's a lot of GST credit which comes in, and that also doesn't get utilized. So if the government is going to look at, and I think there were some press articles on relooking at SUC or abolishing SUC, at least applying it to the auctions before the current auctions. Now, if some of those SOPs or some of those corrections are done, then it makes sense for anybody and everybody in the sector to boom, and that'll kind of bring down 4 to 5% or maybe 6% of the direct revenue cost down, which would add back to EBITDA, and that would then help companies to do much better, including Vodafone. And I think the conversion which is there, I think that's a great step. Of course, the government is making clear that they are very keen on operating Vodafone and taking their investment up to 49%. But unless the operating matrices and the regulatory levies are rationalized, I don't think, India is doing very well on telecom, but can do far better and actually become an innovation hub, which we used to be a few years ago.
The point is that even if all of that happens, can in this picture Vodafone survive? And I just want to talk a bit about the market share of Vodafone and how it has dropped, the revenue market share. In financial year 2018, Vodafone commanded a 38% market share. And if you look at it on a bar graph, it's been a consistent drop, coming down to about 14% in the third quarter of FY25. So, Prashant, completely get your point on levies and tough conditions for the sector as a whole. But as things stand, the consumer seems to be moving away in larger numbers from Vodafone month on month. That doesn't seem to be changing, no matter how much equity infusion is put.
Yeah, so there are 2 or 3 parts to it, right? I mean, if you look at the subscriber numbers in Vodafone, it's still about 200 million subscribers. There are very few companies globally who will be sitting on 200 million subscribers. I think where India needs to move is upping the ARPU, and 2 of the 3 operators have been able to drive the growth of ARPU. And I think the third one will also drive that with more and more network expansion and capex which is happening. And I think Vodafone has made various public announcements that they are investing now in the network, and they've also launched 5G in a few cities in India. So with the network expansion, with a greater usage of data, and with the ARPU growing, the numbers can and should improve. 200 million subscriber base is not small from any standards, from any market standards. I mean, there are countries which are cumulatively 200 million subscribers. I mean, whilst in India it's 18%, but it's a fairly large number, right? 200 million.
Okay. Having said that, and yes, on a wide base, of course, you can look at it either 18% or 200 million. My question, Prashant, is does Vodafone survive? Where does it go from here? Some people are talking today about the government stake going up as high as 80%, because by the time the next bill is due, Vodafone in its current state doesn't seem like it's going to be able to pay it.
I think we need to see how the market evolves, how the ARPUs grow. I think all the 3 players have survived and have grown. I think we had same questions a few years ago about some other players. We also had the same question about BSNL a few years ago. BSNL has turned around and became profitable. I think telecom as a business, is, and there are very, very few companies globally which have shut down. They may merge and they may be in market consolidation, but shutting down of companies is very rare. And as I said, the scale and size of companies is fairly large. It's not a small company. I think to Sanjay's point, India should not have a duopoly. It's not there in a lot of markets across the world. There are at least 3 or 4 operators in the world. The gap may be wide between number 1, number 2, and number 3, or number 1, number 2, and number 3. So that's really the market dynamics. But all of them are profitable and all of them survive in the market.
Okay. So Prashant, you seem to be a little more optimistic. If the question was in a yes or no, can Vodafone Idea survive? You seem to be saying yes, why not? We've seen turnaround stories in the past as well. I wonder if Sanjay Kapoor has the same view.
So Tamanna, the views will differ. I have a different view because I have run telecom companies, and I am now associated with many across the globe. telecom business, unfortunately or fortunately, is a mark-to-market business. It is about how you do versus your competitors that sets you apart. That you can survive in a large market in isolation, remain profitable, but be a distant third or fourth player is nobody's choice. Why would somebody want to be a part of that unless and until the values are really at throwaway prices? So given where Idea is versus Airtel and versus Jio in the market, those two have distanced themselves from Idea. The only way now that if Idea was to come back, or Voda Idea was to come back and compete with them, and can we imagine a situation where they'll be closer to each other on market share, maybe 33, 33, 33, something like that? Is it possible? I don't see Jio and Airtel relenting at all to anybody, given their size, given their brand strengths, given their full capitalization, their ability to borrow money, attract equity investments. I don't think they are going to shed any market share to anybody. So given that reality that VIL faces, I think VIL, with their constraints right now, at least in the near foreseeable future, will be an also-ran operator. They'll be a distant third at best. I don't see them, competing head-on with Idea and with Airtel and Jio and Airtel relenting anything to the third operator.
Yeah. So one concept or one perspective of this is that the other two are not going to release any market share, relent any market share. I want to ask this question also from the point of view of the government's decision. And let me come to you on this, Dr. Gupta. At the end of the day, taxpayers' money has been utilized to bail out a company that has not been able to compete in the fair market for whatever reason. Is that a good idea? And yes, on the other side, you have to weigh that, all right, you don't want to duopoly in something as important as telecom, as strategically important as telecom. But does it make sense?
Yes, thank you, Tamanna ji. It makes total sense actually. And I'm for yes also when you ask about survival or not, yes. And they have no option actually. And that is where your question of this government money, taxpayers' money, shareholders, stakeholders, everything is now watching and they have put them on their toes. So they have to survive, and they can, like Mr. Sanjay mentioned, they can, but they will be third. Yes, let them be third. If there are three operators, there is a rule of three book by Dr. Jagdish Seth, the marketing guru. He is telling any market, three big players can survive. Of course, their percentage can be different. And 200 million is not a small number. If they can retain 200 numbers and make them premium customer. Actually, you should know that though we have 950 million broadband user in the country, 450 million are still unconnected as far as data is concerned. That is the market for them. Rural is the market for them. Broadband homes. Do you know that out of 30 crore homes in the country, only 4 crore homes have broadband, which have to be actually delivered. And the existing players are unable to deliver that. They have touched just 4 crore. So that is the market. There is a strategy in such case because they are put in the corner and they are all kind of thing and they have no option to fail. So they have to use what is called blue ocean strategy. Blue ocean strategy is where the competitors have not reached. The competitors have delivered. Go there because now we are backing of the government also. Government will back you up. Then there is a ESG thing. There is a funding, alternate funding you can do. You can actually do some kind of operational efficiency. You also have to tighten your belt. Yes. You can use the BT example. 2000, BT was also in the same stage. And then they did what is called functional separation through open reach. So they just hived off their assets in a separate company, converted it to a company like Trust, what I was talking, raise the fund through that trust actually. And then also they can in fact make use of the fiber of the government. EPNL and take it on lease on a revenue share basis. They can also 5G. They can gear up for 5G by going to the vendors and use the Airtel, what Sanjay had done in his time, outsourcing. They tell the vendor, okay, bring the equipment, I have the spectrum, I have the tower, I have the license, and let's share. What they call the minutes factory, now they have to call it bandwidth.
My question is that are all these strategies not available to the current management of Vodafone Idea? I mean, these are some great ideas. Why have they not been implemented? I mean, today we're talking about a core question. Is it worth the government's while to save this from the coffers of the treasury? That is what is happening. Prashant Singhal, let me come to you on that. Is Vodafone Idea worth saving from a national perspective?
Before that, I like to mention, because I did not answer this. Actually, it is worth it because ultimately government is getting it at a very low price, at par price actually. Of course, they are taking a risk.
They're paying more than the share price in the market right now.
Yeah, but it is less than par, Tamanna ji, and it will come at that level only. But main thing is, it is solving a lot of problem, not only Vodafone, because it's a lot of economic, like if it does not survive, what happens to the network, what happens to the staff, what happens to the consumer?
I mean, that's private enterprise. Okay, now just a quick word from Prashant on this core point. I got your view, Dr. Gupta. Let's hear Prashant's view.
Yeah, no, my own view is that there's too much at stake for a third operator not to be there in India, and for the entire ecosystem. And it's not just about it's not just about the company; it's about the entire ecosystem, which is the employees, the vendors. What happens to the infrastructure which has been created? Which is today India is still on a shared infrastructure, and Sanjay did talk about re-rating of Indus's stock with Vodafone survival. Now, what happens to if Vodafone doesn't survive? Then what happens to all the infrastructure companies? And there's a lot of investment which is going into digital infrastructure, which is going into macro towers. And what happens to that with the single tenancies which would be there? So if we just add up the direct, indirect investments as well as employment and the entire ecosystem, I think it's very important for the country to have 3 or 4 operators. The market shares may be current market shares, and if the regulatory levies are rationalized, then I think the profitability of the companies certainly go up, which would then enable them to invest more and more towards the network. Obviously, the larger of the two are investing a lot in the network, but then the other ones can also do the investment. And turnaround is not difficult. I mean, we've seen BSNL turning around. I think it was there in the past few. BSNL has had a turnaround.
Yes. So turnaround can be possible. It's worth saving, says Prashant. Sanjay Kapoor, I need to wrap the show, but your take on this, I think this is the key question of the whole conversation. So your take before we close the conversation.
Look, there are two views on this. If you were to look at a completely economical view, to say a view of economics, to say, does it make any economical sense for the government to be investing behind this? And if government was an independent investor, my answer is no. It makes no sense. Why should somebody take such a high risk investment? But I think government is wearing a much bigger hat than only an investor's hat. They want the industry to have proper competition, consumers to have a proper choice. They're also worried about the other paraphernalia that exists along with this, which is the passive infrastructure, the supplier ecosystem, so that it doesn't get exploited. And therefore, the government is trying its level best to maintain an oligopoly, which is the right structure for a country our size. You cannot look at it only from an economic perspective. Economic perspective, answer is probably easier, but I think government is wearing a bigger hat here. So they'll try. They'll still try more.
Of course.
My counter.
Yeah, for the government, it's important to have a very crucial service available to more and more Indians at better rates. Does it leverage that now? And to the point that Dr. Gupta was making, should there be a government nominee on the board? And I'm sure, and in a more powerful position to actually see what's happening with the money that is now going to Vodafone Idea. Well, this is a story that is yet to unfold. We've seen so many twists and turns of the journey of Vodafone in India, now in its latest avatar as Vodafone Idea. We'll definitely be following this one. Thank you to all of you for joining us on this episode of The Big Question today, and to our viewers as well. Thank you so much for tuning in.
he sold most of his stock, 80% as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is, actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Hello and welcome. You're watching India Market Close here on NDTV Profit. I'm Harsh Sahita. With me is Neeraj Shah. And when you're looking at where markets are at, we're seeing a tough day to start this week off. It's a truncated week. We're down now 400 points from the day's high. We're close to the day's low where the Nifty 50 is concerned. What's hurting? Well, it's financials for sure, the heavyweight sector, along with IT, the other heavyweight sector, and then you have pharma. Those three are hurting the Nifty the most, at least in terms of sectors. Broader markets are seeing marginal cuts, but when you're looking at the breadth, broader market breadth is looking far better than you're seeing on the Nifty 50, where you're seeing 4 declines for every advance on the Nifty 50. Broader markets, the ratio is looking much, much better. Last off, what's doing well on a day like this? It's difficult to find that, but media is doing surprisingly well, led by something like a PVR, and then you have oil and gas stocks, which are doing okay. Flat, maybe slight positive or negative bias, but on a day like this, definitely not bad. 23,150. We're testing levels of 23,100 at this point. Let's look at the intraday chart, and you'll likely see as to what I'm talking about. 23,136 is the low we've made, bounced back around 20 odd points. So pain real, at least at this point on the benchmark. Let's look at the heat map as well and zoom into some names. While some of the pain is in IT, HCL Tech, Infi, a bulk of that has been contributed by an HDFC Bank, and then you have the Bajaj twins also down 2.5 odd %. So those are the ones really contributing to the pain. Then you have an ICICI silently down 2% as well. So that's the other one which is contributing to the pain on the index in particular. But then you have TCS, Tech Mahindra, some of the other IT names also there. FMCG also not having a particularly good day today, along with the heavyweight Reliance down 1.5%. So on a day like this, it's the perfect storm for you to be down nearly 350 plus points, closing in on that 400 point mark. What's doing well on a day like this? Well, Trent an IndusInd Bank, a Bajaj Auto. Those are some bright spots in trade. And within the financials, and HDFC Life and a Jio seem to be doing okay. So a couple of names from the auto space, a Hero as well, up 1% or thereabouts. Let's look at the contributors as well, dissect those a little bit, and you'll see nearly 100 negative points contributed by HDFC. HDFC plus ICICI, nearly 150. And then you add in Infosys, 180, along with a Reliance Industries. So nearly a bulk of that, over half the points contributed by just these four heavyweights in particular. Trent, despite the 5%, not making any dent on the index per se. It's that kind of a day. In terms of the advanced decline, if we can quickly look at that, thereafter go to Neeraj for broader markets. There you go. So not a bad day when it comes to the breadth per se. And that's where the broader markets seem to be doing decently well. All of the pain in the large caps, Neeraj.
Yes, indeed. By the way, the numbers of Maruti also don't look all that great. So in terms of large caps not having great news, this is one more stock down about 1.5%. Nothing dramatic, but versus estimates of 1.98, 1.92 isn't quite setting the stage on fire. But the BSE small cap index is in the green. That's the beauty of the market today. I think the breadth may not be all that terrible because the BSE small cap index, like I said, 0.23% in the green. Hester Bio, 15%, Vadilal, 13%. Strength in HBL Engines, which is up about 11%. NACL is at 111, so doing very well. All Cargo Gati about 9.5% too. So a clutch of these small cap names actually have a fairly decent move in the session today. Suven Life, 7.5% as well in the session today. So broader markets looks okay. Aditya Birla, Head of Research and Investments at Invest for EDU Johnson on the show. Aditya, good having you. Thanks for joining in. What's your sense of the texture, Aditya? I mean, one expected large caps to have pressure. This is a lot of pressure. But does it, if your stop loss got hit, Aditya, in the morning, if you were long, would you reattempt taking a long or would you right now sit on the sidelines?
Good afternoon, Neeraj. Thanks for the show. Probably I would sit on the sidelines, but I'm not too perturbed also with the fact that we are seeing about 360, 400, close to about point correction on the Nifty. We are sitting on good gains, Neeraj, and after that we are seeing some bit of a cool off. I won't be too much disturbed, honestly, by this correction that we are witnessing in trade today, because as pointed out at the start of the show as well, that the texture of the market has not changed much. If you take a look at the broader end of the market, it's still healthy, and you have enough and many stocks and sectors which are outperforming in this market as well. So overall, I would still like to believe it's more of a healthy correction that we're getting into the indices, both on the Nifty and the Bank Nifty. And till the time 23,000 or maybe 22,900 on the downside is broken, I don't think the uptrend of the market is shaken decisively to take a call to exit all long positions and start looking for shorting opportunities. Having said that, I think so this is a good opportunity to start building long positions. If you had missed out on the previous rally on the Nifty and the Bank Nifty both, I think so this is a good opportunity to start building long positions.
And therefore, Aditya, your picks for this afternoon. Hi, Harsh also joining in.
Hi, Harsh. Yeah, I've got a buy recommendation on two stocks that I am recommending. The first one is a Concor. I think an excellent chart setup right now. After a massive correction that the stock had posted, it's broken out from a downward sloping channel. And now it looks like it's headed higher. So for a target of 760, I'll be a buyer in the stock with a stop loss at 680 on the downside. Brokerage space is looking interesting to me. So Angel One is something which is looking very interesting. After good consolidation, stock is breaking out of that consolidation zone. And I think stock is poised to test levels of 2475 to about 2500 on the upside. That should be the target, and the stop loss of 2300 can be maintained, and a fresh long position can be initiated here as well.
What about Trent, Aditya? So up 5% nearly today. Its sustained strength is what's standing out in terms of what it's doing today in trade, as well as what it's done over the last few trading sessions. What's your sense on this one? Is this a good pick at this point?
Oh, definitely, Harsh. I think so. There's more room on the upside. In fact, 6,200 is what I think the stock can test. And then there's been a strong going for the stock. After a decent bit of a correction, stock did take support at key moving averages, Fibonacci retracement levels. So those were signs that the stock can bottom out, and from there it has seen a decent bit of a rally. If somebody's missed out on buying fresh, maybe can look at still going fresh long at current levels with a stop loss just below 5,500 and look for a target of 61 at about 6,200. I think this space will see further room on the upside. So trend can definitely be looked at, and this entire space looks interesting to me near at current levels.
Your view on IndusInd, Aditya?
So IndusInd is a very difficult pick to, very difficult call to take right now. Because it has been all over the place. After a correction, stock did see a bit of an up move. I still see resistances on the upside. 710 Harsh is the immediate resistance for the stock. I wouldn't look at going long on IndusInd just now. I would wait it out for it to cross 710, maybe see some kind of an upside. I'm okay losing out on that, some 3 to 4% upside from current levels, but I would be more certain and more comfortable above 710 to go long on IndusInd Bank. There are enough and more banks to look at, maybe HDFC Bank after today's correction, and SBI, Kotak Mahindra Bank. All these three look interesting to me.
And what should someone do, someone who's holding IT at this point do, Aditya, in your view? And are there any specific names within the Nifty IT pack that you're liking?
It's difficult to trade the IT pack. It's clearly all over the place. We see short covering rallies and then it gets eaten up and then you see a leg of correction again. There are favorites within the IT pack. I would stick to mid-cap IT names as of now. I would avoid the large-cap IT stocks. I would see some of the mid-cap IT stocks are trying to form a bottom. Names like Coforge, names like LTTS, LTIM. These are the three stocks which are actually looking interesting to me. And after today's correction, I think Coforge and LTTS, both of them look interesting to me. In fact, LTIM can also be looked at. So Coforge, I think, is poised to test levels of 84 and about 8,500 on the upside. So a fresh long addition here can be looked at. Risk to reward is in favor of going long with a stop loss just around 7,600 on the downside. LTTS too, I think, is an interesting play at current levels. This is one stock actually which is bucking the trend in trade today. So can test levels of 4,800 on the upside, and LTIM too, I think it's an interesting pick to look at current levels. So I will right now focus more on the mid-cap IT space, Harsh, rather than focusing on the large-cap IT names. There's a bit of a consolidation which I would want to see in the large-cap IT names before I venture out and look at them. And the top bet from them will be a TCS.
And what about the heavyweight HDFC Bank? Because that's proving to be the key drag on the index as well today, and the bank Nifty. So give us your view, one, with regard to HDFC Bank, and second, what levels should we look out for on the bank Nifty?
So let's talk about HDFC Bank, Harsh, first. I think, as I mentioned at the start of the show as well, today's correction, though looks large on HDFC Bank, a 3% correction, but I think it is coming to a very important support level and offers an excellent risk to reward as well. So I would actually stick my neck out, initiate fresh long positions in HDFC Bank, maybe with a stop loss at 1740 on the downside and look for a target of at least 1850 to about 1880 on the upside. I think in a day or two, stock will bottom out again and we'll see an uptrend, resumption of an uptrend from current levels. So definitely a thumbs up, and I would want to go fresh long in HDFC Bank at current levels. Talking of Bank Nifty, that too is coming very close to support levels of 50,600, about 50,500. Those should be your stop losses if you're looking at fresh long addition here. And I think Bank Nifty can retest levels of 51,001 at about 51,400 on the upside. So both the banking index and the HDFC Bank after today's correction look healthy and look interesting to me. I would want to stick my neck out and initiate fresh longs in the large cap banks, particularly HDFC, Kotak and SBI.
Okay, some stocks which are doing well, I mean, on a day like this, right? We spoke about them. I'll pick up 2 or 3 from those. Aditya, any thoughts on Atul Auto, HBL Engineers, or NSCL Industries, which I think has had some serious uptrend in the last few days?
So let's talk about Atul Auto, Neeraj, first. Looks very interesting to me for sure. Yet to break out of a downward sloping channel, but today's up move is backed by very strong volume. So that tells that the stock is definitely trying to form a bottom and can see further upside from current levels as well. If I would want to go ahead and buy the stock today, maybe I'll wait for tomorrow's move and see how the stock opens. If it opens somewhere around where it's closing right now, Maybe 490, 95 is a very strong support area for the stock. If I get the stock again at these levels, maybe I'll initiate a fresh long, yes, for a target of 570 on the upside, place a stop loss somewhere around 450 to about 460 on the downside. But yeah, I will wait for a confirmation of the trend reversal till tomorrow. So Atul Auto does look interesting to me, good volumes. But yes, I will wait for a confirmation in trade tomorrow. Talking about NSIL, that too is seeing a very sharp up move. And what is interesting is once it broke out of it 200 DMA, it retested in the previous week, and today it's up on good volumes again. So yes, at current levels, I could initiate fresh long positions in NSIL, look for a target of at least 6,600 to about 6,700 on the upside. And on the downside, I think so. 5,900 to about 6,000.
Aditya, sorry, NACL is 112 rupees.
Okay, you're talking about NACL. I heard it as an NSIL.
No, that. I thought 6,000 is too tall a target. Okay, but very quickly, Aditya, NACL Industries, it's locked on upper circuit. How much more?
Yes, that looks interesting. Very healthy volumes previous month in the stock. I think stock is poised to test levels of around 130 on the upside, Neeraj. Though you'll not be able to buy the stock, it's locked on upper circuit. If you already have it, I would suggest continue to ride the uptrend for a target of 120 with a stop loss at 107 on the downside.
Okay, Aditya. We'll leave it at that. Thanks much for taking the time out and being with us today.
Pleasure, Neeraj.
All right. Now the question is, because it's a very critical week, and what to do in a scenario like this with investments? How are global investors thinking about it as well? Arvind Chari, CIO of Q India, invests money in India, talks to global guys, looks at the macros very closely. So all of this put together, Arvind, good having you. Though it would have been better if you are in India that you should have been in the studios, Arvind. I have that complaint.
I wrote to you. I told you I'm in India in Feb, and we never figured out a time.
Okay.
Happy to do this anytime for you, Neeraj.
I know. No, but anyways, Arvind, so good morning to you, I guess, from where you are right now. Critical week, Arvind, right? I mean, what is your base assumption? I mean, assuming that there is, because India and US are talking, trying to do some bit of a deal, whether it happens now or later, but if the tariff outcome on India versus the US, or India and the US, is not the worst case assumption, and is, let's assume the best outcome happens, what happens in such a scenario to risk assets? Because I would presume that the tariff war would have some impact on global markets by and large. So even if India's outcome is positive, does India do well, or does a global pullback drag everything lower? What is your base assumption?
Interesting. Can I pull it back from? I'll speak about India and Trump and tariff.
Yes.
But there is a very interesting global trend that has happened, and it's been in the talks for the last 4-5 months. Which is, so when we used to go, and we still go and meet, when we meet investors and we talk to them about Indian public equities and the beautiful long-term ride that it has been, and it looks like it will continue to be over a long period of time, the common refrain that we get is, we love the story, we like the opportunity, but we do not do single country allocations. We don't take single country risks. And here we are today, many investors are finding and scratching their heads saying that there is a very large single country allocation in their portfolios, which is the United States. It's not only from American institutions, American individuals, but global investors are heavily invested into the US markets. And it's been a phenomenal run. I mean, US companies have been on the surge of tech and innovation, and that has done very, very well. And today you are in a situation where US is more than 60% of the MSCI World Index, or MSCI All Country World Index, ACWI as we call it. And it's a sizable allocation in any portfolio. And when we ask them now, saying that, do you think about US as a large exposure and single country risk? And of course, everybody is coming, the chairs keep moving, the hands keep shaking. And in the sense that they are thinking about it, we don't know what is the outcome. But we can at least tell from our interactions that many investors, both in the US and outside, are thinking about how to think about it. And it is sizable, Neeraj. Foreign investors own about $40 trillion of US assets. About $31 trillion is public markets, equity and debt. About equity is about 17 trillion and debt is about 14 trillion. And the rest is private capital. About $7-8 trillion of money is in private US assets. And I'm not even counting about real estate that foreigners own in the US, right? Canadians own a lot of real estate in Florida and Texas to get away from the cold, and so are Europeans. So there is sizable amount of money invested in the US markets. And the way to think about it is, even if 10% of this allocation of 40 trillion moves away from the US and looks for home country or other shores, that's about $4 trillion. And the question that we should be asking is, can India get, say, 5% of that allocation? So about $200 billion of inflows. And this is the global picture that we are seeing. And it looks like this is probable. I don't know whether it will be 5%, 10%, whether it will be 20%, whether it will be nothing. But these are the conversations that most investment committees and most investors will be having. And India is fair play in that, because India has two very large things going for it. A, it has the absorptive capacity. Indian markets, equity market cap is $4.5 trillion. Bond market is about $2.5 trillion. The Indian FDI, private equity, venture space is fairly large to absorb capital. And the second thing going for India is that India is by far the only friendly country in a scenario where there is risk. And the risk is not market volatility and standard deviation, and they are risk. But the risk is about geopolitics. The risk is about your assets being taken away, or you having tax or tariffs. In that, you would want to associate yourself with friendly countries who will treat capital in a fair manner. And India has absorptive capacity and this notion of friendly capital. Now, if you have follow up on that, otherwise I'll take on the Trump question. But this is the background and scenario that we should be seeing, and this will play out over the next one to 2 years.
So actually, okay, let me rephrase my questions, Arvind, since you moved down that path, right? Which is this, that if indeed all of this tariff and other conversations bring about a steady weakness in DXY over a period of the next 2 or 3 years. Let's assume you build that out, or let's assume I'm building that as a hypothesis. Could it well be happen that we might see a good run in other emerging markets, even if the US markets were to suffer? US doesn't do well, the mother market is not doing well, it is catching a cold, or it is sneezing, but the rest of the markets are not catching cold. Can Indian markets do well even if a US market is not doing well over the course of the next 24 months, cumulative?
You just go back to the decade of 2000. You saw that the DXY was depreciating. The US assets didn't do well, or US equities didn't do well. US businesses were doing well. And emerging markets had a big rally, and India actually did better than or almost as good as the other large emerging market countries. So India has done well in the last decade when US has done well and other emerging market countries have not done well. And India has done well or as much as other emerging market nations in the previous decade. So the Indian story, as we know, is a very simple story of 6.5% real GDP, double-digit nominal GDP, and then that gets reflected in equity markets. And I don't see that is changing. It's not that we are growing at 8, or it's not that we are growing at 4. Right? We are still growing at a steady pace of 6.5, and that has delivered over a long period of time. So from that perspective, I don't think that should be any concern from a long-term perspective. In the short term, as you spoke about, Trump and tariff, I think India should be very careful in terms of not exposing their services to tariffs, because that is a bigger export that we make, especially to the US. I think 50-60% of India's software services exports or GCC exports are going into the US. So if that is away from Trump's eyes, and on the goods, I think India might be able to do a good deal with the US in terms of, say, buying oil as compared to buying oil from Russia, or allowing certain high value US imports to come in, like, Harley Davidsons or the EVs to come in at the same time getting some more concessions on trying to get some more exports into the US. If you're able to do something like that, we haven't heard anything from the government yet. But if you're able to do something like that, I think we should be able to deal with the situation reasonably well.
Point taken, Arvind. This is Harsh Sahita also joining in. I want to quickly take a step back, Arvind, and ask you that if $200 billion hypothetically were to come to India, what are the pockets that they'd buy first?
So if you look at the allocation pattern of foreign investors, at least up until now, if I look at the last 20 years, 2x more money has gone into private markets, so private equity, venture, real estate, infrastructure, and half of that has come to public markets. So even if you assume half goes to private markets, 100 billion comes to Indian markets. So that will get split into, say, public equities and fixed income, because fixed income also we are part of the bond index. And as Neeraj said, when the dollar, if the expectation is that the dollar will depreciate, you tend to get more allocations to emerging markets. And emerging markets, what we call local currencies. Investors are willing to take on the currency risk of emerging markets as well. So you'll see some allocations. And, broadly, we still feel that India is underallocated. Like India's weight in MSCI ACWI is about 2%, right? India's weight in global market cap is about 4%. If I look at overall global portfolios, I think less than 1% of global portfolios are invested in India. So there is a lot of scope, as I said, from absorptive capacity. And what they will buy, it depends on whether they track a passive index or they give allocate to active managers like us in terms of how we build portfolios. But we have seen some amount of broadening of foreign ownership. Like 10 years back, 95% would have been in the top 50, 60 stocks. Today, we have seen it broadening out to about 100, 150 stocks. So, that overall space of, as the liquidity and the depth of the market changes, you're seeing those allocations happening. So, I can't make a guess of what they'll end up buying and what sectors they'll buy. But it will be a broad-based allocation, because these are global investors who do not have India, and they're making an allocation. And their objective should be to try and protect the risk. They know they'll get the returns and they can deal with market volatility. But the risk of liquidity, the risk of governance, and the risk of valuations in India, if they're able to protect those three aspects, then they will make a fairly long, sustained allocation.
Point taken. And with all that's happening globally, Arvind, would be great to understand your view with regard to demand for Indian IT. There's so much happening in geopolitics. There's so much happening with regard to the macro as well, where rates are going to go. Yeah. And therefore, how should one view demand for Indian IT? And what could those other pockets be in terms of export potential or possibilities? What could those opportunities be like?
So in IT, generally we've seen when there is a scare of global recession, and we are seeing signs and shades of that, you tend to get an expectation that global IT spends will initially reduce, and then it picks up. The other way to think about IT is AI, in terms of disruptions of AI and the ability to implement AI. But we saw that in the digital space. If you go back 7-8 years, the entire mantra was digitalization. And there was a scare on Indian IT services and GCC saying that they will miss out, and they will not be able to take care of the digital aspect, digital movements in global IT spends. And we realized that the Infosys and the TCS or the GCCs of the world were the ones who are implementing digitalization across global companies and global IT spends. Something similar should happen with AI. There is a tool of AI, and the AI has to be implemented and used in different organizations. So the hope is that that aspect remains with the IT companies or the GCC spends that global companies do in India. I think that should remain. The other aspect, as I said, is the friendly aspect of India being friendly to different nations, right? India can have a good deal with the US, with good deal with the EU, and can have a good deal with some of the other Asian economies. And that aspect of whether PLIs or some export opportunity or China plus one has not played out in India. But if that movement continues to happen, where people are able to offshore into India and India can export, we'll see how it goes. But there are a lot of opportunities, and especially given India's place in the geopolitical sphere, I think it is for us to lose this opportunity. I think policymakers and regulations and corporates should be out in the front to be able to take market share away and benefit out of this opportunity that is coming through India's way.
Let's wait and watch if they do. But Arvind, maybe in the near future, once there is some clarity around these tariffs and the resultant moves, it'd be lovely to do a conversation again if you have the time.
Absolutely. Yeah. Anytime for you.
But thank you. And thank you so much for joining in today and giving us your thoughts. Really appreciate it.
Thank you so much.
Thanks, somebody sits in London, perched in the right area, speaks to multiple global investors, giving us a sense of how people might be thinking about it. How is he thinking about it? It's time for a short break. But before we go into that break, hear out Dixon Technologies CFO Saurabh Gupta talking about how government's PLI boost will help EMS companies and impact their margin growth.
Really, we see this, our mobile margin, which is presently hovering around 3.3, 3.4%, can potentially go to around 4.4, 4.5% in the next couple of years, mainly on account of this backward integration. Similarly, if you look at the IT hardware PLI, initially we will start with sub 3% kind of margins, but there also the way the whole component PLI scheme is there for IT hardware components, and also the IT hardware component PLI scheme, which also is targeting towards components. So there also, if one is able to get into do more backward integration, for which we have already signed into displays. We're also looking to get into the SSDs, the power supply in IT hardware. So that can also potentially take our margins upwards to 4.5%, 5% in next couple of years. So both mobile and IT hardware will see a large margin expansion in the next couple of years, starting next financial year. And both these categories are almost 75 to 80% of my revenues. So that will have a positive impact on my company level margins. So we feel that the company level margins can potentially go from last reported 3.7% to effectively 4.5, 4.6% in next couple of years on a much higher turnover base.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What
Welcome back. You're watching India Market Close. A couple of stocks really flying in trade. I want to quickly mark them out. You have something like an SML Isuzu up 8.5% on the back of the auto sales, or rather their data for the month of March coming out. There you go, 8% up and away. You also have a Hudco, which is now trading up nearly 4%. Again, on the back of quarterly updates. A Karur Vysya also coming out with quarterly updates. Stock is up 2% odd. Some of those you might want to keep your eye out on. But it's that time of the show where we bring in Somit to tell us everything that's happening in dealing rooms and all the chatter from there. Give us an update on today, Somit.
Well, yes, the first stock on the list today is Bank of Baroda, and dealers are indicating that large HNIs have been accumulating this counter at lower levels. Dealers expect some potential upgrade coming in for Bank of Baroda from an MNC brokerage, and that is one of the reasons why large HNIs have started to accumulate this counter. Second stock on the list is Hero Motor. The stock is holding up well even on a weak market today, and these are indicating that the March 2025 sales number could turn out to be good for the company, and hence that's the reason we are seeing some buying action when it comes to Hero Motor. Third stock on the list is SBI Life. This counter has been weak in trade. It's down around 0.4% currently, but dealers are indicating that the March 2025 insurance number that is expected to come over the next 1 week, that number could come out to be strong for SBI Life, and in turn the entire fourth quarter numbers for SBI Life could be ahead of what the street had earlier estimated. So keep an eye out for SBI Life as well. And lastly, Voltas. Now that is one stock that is a top definite loser in trade. Dealers are indicating that the selling pressure today is largely because of market share losses that the street is anticipating for Voltas, and that's the reason we are seeing that kind of a downtick when it comes to Voltas. It's down 7%. Now the company had earlier indicated that their aim will be to maintain their market share and they will focus more on absolute profit rather than margins. But what the street is now anticipating or expecting or anticipating is that that strategy has not even played out for Voltas, and there might be some market share losses, and hence we are seeing such kind of a big downtick when it comes to that AC maker.
Okay, thanks so much for that, Somit. Always insightful. In fact, we've had a couple of your breaks which have actually been proven on the channel. So thanks so much for this. But yes, so keep your eye out on some of those names. Very quickly to sum it up, you have a Bank of Baroda, Hero Moto, SBI Life and Voltas. 4 of those on our list today. But let me bring in quickly Kush Bora, founder kushbora.com, to talk to us about markets and more. We also are joined by Aditya Shah, founder Hercules Advisors. Kush, let me first quickly unpack what's happening today with regard to the Nifty, the Bank Nifty, and some of the large caps which are facing pressure. What's the view out there at this point, especially from a levels perspective?
Hi Harsh, good afternoon. Hi Aditya.
Good afternoon.
Well, I think the excesses that we saw in the second half of March, when everyone was talking about, how the markets are now seeming stretched in the near term, those excesses are being taken out. So I not particularly disturbed by the move that we're seeing today. I know in magnitude and percentage and points terms, this is a big downcut, but let's not forget this is a culmination of a 2-day move. Yesterday the markets were shut. That plus today's move, playing out. So as I said, not too disturbed by what we are seeing right now, because as I said, the excesses of March are being taken out at the moment. Now we've got support around the 23,000 mark and then the 22,800 mark. So as long as the 20-day moving average of 22,800 is protected, is held on to, I don't see harm in holding on to your long positions. Should you go out and create fresh positions? Not at the moment. we know tomorrow is a big event. Most of the markets are starting to react to it. But why not just wait for a day more and let the event, get out of the way, and then perhaps because of the, or rather, with the direction that we have post the event, go out and create fresh positions. So at the moment, 22,800, 23,000 is the zone that I will watch for. As long as that is protected, long positions can be made. But if you don't have any, just wait for one more day. April 3rd is when we should consider creating fresh long positions once the event is out of the way.
Interesting. And Kush, where would you make your long positions at this point? What are your picks for this afternoon?
Yeah, so with that view in mind, even in a market like this, I'm still going with two stocks on the long side. First is HDFC Life. This is one stock that we've discussed in the recent past for a target of about 710. Very close to that. The first one's been hit, second one on the way. So you could still continue holding on to this one or create fresh positions for targets of 710 and 725 with a stop loss around the 680 mark. Now the second one is Nava. This stock also is one that we had discussed last week for a second target of 503. While in volatility, the stop loss was hit. Right now, even now, the stock is well and truly holding firmly above that level. Also, if you see the volume in the last 4 or 5 sessions, it's been staggering. The momentum also continues in the market like this, so strength, apparent even at the current juncture. So for levels of 540 and 560 with a stop loss around the 498 mark, Nava can still be considered for a fresh long position.
And what about Telecom, Kush? How should you view that one? You've got Vodafone and you've got Indus Towers, both of which are buzzing in trade today. Give us your quick views on that sector space.
On a lighter note, I only heard one of the stocks that you mentioned, which is Indus Towers.
Point noted, Kush.
Enough and more, experts have tried their hands on it. I'm not sure how many of them have been successful. I have only been successful because I've stayed away from Vodafone Idea for the most part of the last year and a half, and that view still remains. This is a news-based jump that has come about. The stock might find resistance around 8.5, about 10 zones. So avoid at the moment. The view, as I said, still remains on Vodafone Idea. As far as Indus Towers goes, yes, there can be a long position which can be considered. However, what you'll find is that the momentum here hasn't really picked up. It's gone flat. So while the stock has respected the 315 support zone, the medium-term support zone, tested it 3 to 4 times in the last month or so, the momentum is missing. So if you're more of a positional, a trader or a trader investor with a 6 to 12 month kind of an horizon, then with a stop loss around the 315 mark, you could consider going long in it for a target of 380, and once that is taken out, perhaps even a 415. As I said, the momentum is missing, so it could test your patience a bit.
Aditya, you really like deep value, and Citi has opened a 90-day catalyst watch on an Indus Towers, target price 470. Believe that one is deep value, in your opinion?
Good afternoon, Harsh. So within the telecom space, I am bullish on Reliance and Airtel. I think both those two guys are going to do really well. Now it's a duopoly. I don't think Vodafone Idea has any way out per se. Today the stock price is moving, but that I believe is an opportunity to exit out. I will also not go to Indus Towers. I will stick to Reliance and Bharti Airtel. The real clear winners of what is happening with Vodafone Idea is Reliance and Bharti Airtel. From my perspective, even though those two stocks are not really very cheap, but I would like to stick to them. With the same story playing out within Zomato and Swiggy. Similarly, Reliance and Bharti Airtel are the ones who are benefiting.
Okay. Aditya, the move in trend today and the fact that their store additions were a lot higher than what people were, or fairly higher than what people were penciling in. Does this mark the resurgence after the corrective move that we've seen? I mean, would you be constructive, or is it too expensive a stock to be constructive on?
Neeraj, for me, I've called this out multiple number of times. Although Studio is doing pretty well, the cheap quotes that Studio is really giving about, that will feel about 35 to 40% growth for trend. But still, the stock has already discounted a lot of its growth for the next 3 to 5 years. From my perspective, trend is a really very expensive stock. Even if the growth can be 35%, the stock can undergo a time correction. So in my opinion, you should avoid stocks that are trading at high valuations. We've seen time and again when you buy at 100 times multiple, you are only left crying, and you could see a time correction of 2 to 3 years.
Okay. Okay, well, that's a fair call too. Today, all the CDMO players, for example, are also down. But what's doing well? ITC Hotels has had a big move today, 6% spurt in the last few minutes of trade. So keep an eye out for that one. Gallant Ispat is higher. Gandhar Oil is higher. Watch out for some of these names. Just before we get to Anushi, Aditya, a word on ITC Hotels. Can't ask what it technical be, fundamentally though, is it a good space to be in?
Neeraj, hotel business I do really like. Here, our number one pick has continued to be Indian Hotels, and that stock has done pretty well over the last 3 to 4 years. ITC Hotels, since we are trying to understand more about the business standalone, I will not be able to comment at this stage.
Okay, all right, but we'll switch focus to the sector of the day, because real estate in focus, one of the top sectoral losers in trade today, 3% lower, and this is after the Maharashtra government hiked ready reckoner rates for financial year 2026. It's of course the first day, and the hike is roughly 4.4%, and that's of course on average. Region-wise, it's slightly different. Anushi joins us with that perspective. Anushi.
Right, thanks for that, Harsh. So as we are seeing a strong move in terms of where the real estate sector is concerned, and this is on the back of the changes that have taken place in the ready reckoner rates, which have been increased by 4.4% for the year FY26 onwards. So the rates are effective from today. What we are looking at is that the initial speculation which suggested for a 10% hike. So if we compare it in that perspective, the 4.4% of an overall increase that we are seeing is comparatively lower than what was anticipated. But what could this increase in ready reckoner rates mean? But firstly, for the context of what is ready reckoner rates, these are the benchmark rates set by the state government or the local authority for any property transactions which are there. So this is the minimal value that we are looking at. In fact, if we see what have been the collections for the Maharashtra government for FY25, we are looking at a mark of around 57,422 crore in property revenue, which is higher than the target of 55,000 crore that was guided for. So already there is a spurt in that we are looking at. But what are the negative implications for this on real estate developers as well as consumers? Something we should be focusing on. Firstly, if we see increased property cost, that is something that needs to be focused on. Along with that, now if you are looking at stamp duty, while the percentage has remained unchanged because of these rates which have been moved upwards, there would be higher stamp duty charges as well. These are for the buyers, but it's very important to note that while we are seeing moves on the real estate sector index for today, it's not the luxury side which will see a higher impact on these rates, but the affordable housing segment. So a lot of these moves today we are seeing is also related to the sentimental kind of move driven by the news flow which is there. So escalation of construction cost is something that we can expect along with that, and higher hit on the affordable segment is what we are seeing. Just quickly walking through the revised rates in the key regions if we are seeing. So Solapur is the one with the highest revision, about 10.17%, followed by Ulhasnagar and Thane seeing revision of around 7 to 9% upwards over here. But considering Navi Mumbai and Pune district, those range in the 6 to 7% of rate. That is what we are looking at. If you are to divide it into brackets, rural areas are seeing about 3.36% of an increase, urban areas 3.29%, municipal councils, this is excluding Mumbai region, we are seeing 4.5%, and for Mumbai overall we are looking at a 3.4% of an increase. So this is the overall story which is building up. Just to give perspective on some of the key players which are there in Mumbai, we are looking at something like Macro Tech Developers, Godrej Properties and Oberoi Realty, all seeing hit of around 3 to 4% each. Also want to highlight something like a Keystone Developers and Aditya Birla Real Estate, alongside which are also over here we are also seeing about flattish moves over there as well. So this is the overall picture that we are seeing in terms of the news flow, wherein the ready reckoner rates have been increased, and thus the kind of moves that we are seeing in the real estate sector index today.
And what can we expect, Anushi, from Q4? Because what you've done is, and I understand, is that you've compiled basis what analysts are suggesting, what the Q4 earnings could possibly look like. So what is that perspective? Because is this 3% lower today justified is what I'd like viewers to understand.
Okay, so in case of where the Q4 numbers are concerned, it's a mixed picture that we are looking at so far if you have to take different developers over there. So firstly, if you are talking about the launches that we are expecting over here, so launches, the pace of acceleration has been considerably slower considering the lack of approval scenario which has taken place. We have two sets of scenarios over here from two different brokerages wherein Nomura remains bullish on the fourth quarter for real estate, wherein they say players with large scale launches have performed relatively better in Q4. Now this includes the likes of something like Godrej Properties as well. There is high expectations building for how Aditya Birla real estate would do because a lot of their launches were built up in Q4. So commentary on their from the management side on whether there is spillover in Q1 is something that we should expect going forward. First, DLF we are seeing it's expected that it is going to be a slower quarter, and Oberoi Realty as well with the absence of new launches which have taken place in Q4. But do note that DLF had already achieved its Q3 FY25 guidance in the 9-month period itself. Now what Citi is saying is that they expect Q4 pre-sales to be softer for all the covered companies which are there, and residential companies especially are expected to see about a 41% of a jump, but this is on a base of a 35% decline which was there last year. So what we have already highlighted is that the launches have been softer due to the lack of approvals which have taken place. So that is one factor we should be considering for. In terms of where the guidance is considered and how the companies have fared, let's take a look at that also. If you are looking at something like Aditya Birla Real Estate, now they have achieved about 33.6% of their guidance so far in 9-month FY25. So essentially Q4 is the most important quarter of the business. We'll see how the pre-sales numbers shape up over here. Prestige Estates is one stock where the analysts expect the company to miss the guidance for the year and expect some spillover of these launches which are to take place in the first quarter of FY26. They've achieved about 42% of their guidance over here. Sobha Ajmera about 61 to 52% mark we are seeing. On the other side, what we have on the stronger side is something like a Macrotech Developers and DLF. DLF has exceeded their guidance already in the third quarter itself, and Macrotech has remained consistent with a 20% of a pre-sales guidance mark that we have been watching out for. So this is the overall build-up that we are seeing for the real estate sector.
Okay, thank you so much Anushi for all of that perspective with regard to the realty sector. Now let me go across to Aditya, because Aditya, the realty sector is one which has seen the maximum damage as part of this larger correction, if I can call it, till February of 2025. Is this looking interesting in terms of the overall macro setup, or is there a cause for concern at this point where realty developers are concerned?
So while there is no cause of concern per se, the rates move up and down time and again. So that is not a problem, but there is one second thing that is going down is that the stronger developers continue to get stronger and the weaker developers are being flushed out. So within this entire listed space, companies like Godrej Properties are doing exceptionally well. Exchange of their reality will also start to do really well over the next 3 to 6 months. And weaker companies continue to struggle first. Here, we need to stick with the likes of stronger players such as Godrej Properties. Over the next 3 to 5 years, the real estate sector will continue to remain robust per se, and good developers will continue to make a lot of it. Where like Godrej Properties, Oberoi Realty, or to some extent Prestige Estates as well, are much to look out.
Okay. Pain certainly in this bucket today, though. Kush Bora, any realty name that stands out on the list, and if not, the CDMO players which have had a bit of a sulk today?
Not too many to choose from in the in the realty space. The couple of names that stand out are Ajmera Realty and Suntech. They've seen a good up move, some correction, some consolidation along the way, but holding above some of their key support zones. But again, not enough traction in either of these to perhaps warrant a trade, from a near-term perspective. So these are the only ones that stand out from a technical standpoint. But as I said, I wouldn't really invest or trade in some of these names. Now, as far as some of the other names that you've mentioned, the CDMO players and something in the pharma space, a lot of these stocks have seen traction, but they are starting to give way now. So I would be a little cautious. as far as some of the names are concerned, Lupin, Sun Pharma, actually they're setting up for a good shorting candidate if the support zone. So, for example, in Sun Pharma, if 1675 is broken, you could go short on this one. If 1940 is broken on Lupin, these actually become shorting candidates. The volumes also on the upside, on the downside actually are now starting to spike up. So more of a shorting opportunity on these. But as I said, for now, because they're close to support zone, just hold on to your horses.
Okay, all right. Thank you for those views, Kush and Aditya. Stay with us. I'm going to quickly go across because we have the management of AGI Greenpac joining us. We have the group CFO Sandeep Sikka joining us this afternoon. Welcome, sir. Of course, this is on the announcement that you've announced or you've approved 700 crore rupees for a new container glass plant in Madhya Pradesh. Company's capacity expected to expand by 25% and production in this factory to commence within the 24-month mark. Okay, so sir, let me start off first by understanding from you. Currently, your capacity utilization is above 90 to 95%. You expect that to sustain over the next couple of years before this fresh capacity comes on stream, and how quickly does this fresh capacity do you expect to exhaust in terms of capacity utilization?
So basically, if you see in the last 1 or 2 years, we have done a number of initiatives in terms of debottlenecking our capacity. And when we have given a declaration even on the capacity, this includes a capacity which is relating to debottlenecking. There are a number of initiatives which we have done relating to our production capabilities and furnaces, so which is giving the higher throughput. We feel, taking another 5 to 8% incremental volume growth from the existing furnace is a possibility in next 12 to 18 months, and by which time we'll have a good visibility when the new furnaces of this 500 ton in Madhya Pradesh is coming up. Apart from this, company is also undertaking other initiatives like looking at certain other inorganic opportunities wherein it can immediately add the capacity. So these are a number of internal things which we are planning. But right now, board has approved only the setup of the new greenfield plant in state of Madhya Pradesh, which is the first move in terms of setting up of or expanding our geolocation across the country.
Okay, Mr. Sikka, so when does this plant come on stream? I believe, and actually give us a sense. Is this what? Is the investment ROI what one time investment? Is it more? When does it come on stream? Does it manufacture the same margin of products as the existing line, or is it different?
So we feel that this plant is capable of giving 1 time the sales turnover, and since the plant will be the entirely new plant, definitely the efficiency factor of the newer machineries versus the older machineries which we'll have, we feel the newer machineries will have a better benefit, and we are aggressively working on the timelines to see that how this can be implemented within a span of 18 to 24 months, and this will definitely lead, add, as we have already stated, 25% capacity boost will happen in 24 months.
But safe assumption that while you're working aggressively for 18 to 24. It might not be wrong to expect this to start contributing from FY28 onwards.
Yes, because right now we are just closing on 31st March 25. So the contributions will start coming only in FY28.
And so, just trying to understand this 700 crore of capex, how are you going to fund it?
So our existing debt is around 330 crores, and essentially we feel that this should be paid off in next 18 months, given the repayment schedule we have. We will borrow around 60 to 70% of the project cost of that 700 crores by way of a long-term loan, and then fund it over a period of time. So most of our loans have a clause which is relating to prepayment, wherein we can choose to prepay the loans without any major cost. So the idea is to accumulate cash, and if required, then we can, go and pay off those loans.
Okay, understood. All right, sir. So therefore, this will basically ensure that your top line goes up by around 700 crore in FY28, and you'll still be able to maintain your margin of 25%. Is that understanding right?
Yes, but in the interim from here till the 24 months, as I told you, our initiatives and our endeavor is to further unlock the value on the production side. So if we can further build up the volumes, right now the capacity utilization is ranging 93, 94, 95%. If we can further bring it to a level more nearer to 100% capacity utilization, which we have seen is a feasible option in few of our furnaces. So we'll build those volumes, and then the whole game is around building volumes right now because market demand is pretty strong.
Understood. And so outlook on raw material costs at this point?
We have two major raw material input raw material cost. One is because glass stage wherein the temperature is around 1600 degrees centigrade. So AGI Greenpac is the only company which has a good fuel mix. We can do any types of fuel mix. That contributes around 20-25% of our cost depending on the fuel price and the selling price. Another is a soda ash. So prices of all the input materials had been volatile 2 years back, but most of them are stabilized now. And accordingly, the selling prices are also more stable in the market right now.
Okay. Mr. Sikka, when I look at the console numbers, or rather when I look at the numbers, your operational metrics have improved, if I'm not wrong, in the last few years. In fact, on a quarterly basis as well, things have looked up. Is this the new normal? Circa on a standalone basis, circa 26%, on a console basis too, your operating margins at 26. Is this the new normal?
I'll always say that this is a new normal for us, not for the industry, because number of initiatives and number of investments which we have done inside the plant.
For you.
Yeah.
So for you, 26% is a new normal, you're saying?
Yeah. We should be able to hold on to these numbers.
And even with the new capacities coming on stream, the margins will not dip for sure. If anything, they will improve. If I heard you.
Any new plant in the first 1 or 2 years.
Yeah.
But ultimately, once it is stable, we strongly feel that it should fetch us a better margin than what we are already earning now.
Okay, I just have one more question, sir, at least from my end. 25% uptick post this capacity coming on stream as capacity moves up. What happens until then? FY26, 27, is there a guidance that you've given for growth?
We have given around 8 to 10% growth, which momentum we can do with the existing capacities we have.
This is revenue growth or is this volume growth, sir?
Value volume is most since the prices are stable, so I'm value volume at the same level. But we are also aggressively looking at inorganic opportunities, if any, available, which we would be considering if they come through.
Okay, and balance sheet strong enough to make a large acquisition?
Yes, definitely.
Okay, anything on the anvil?
No, right now nothing. This is something which board has approved, and once board approves anything further, we'll definitely look to talk.
Okay, wish you all the best for that, Mr. Sikka. Thanks so much for taking the time out.
Thank you very much.
That's AGI Greenpac, 6% higher, new capacity comes on stream after 24 months under the best case scenario, or under the worst case scenario. I think you can think of it either way. Aditya, before we let you go, you heard some of this conversation as well. Do you look at this one or any such business at all? Fair call. 6% higher Kushbora, AGI Greenpac, any thoughts?
It's actually a good move, and it's shaping up for much higher levels at this resistance. There was this resistance around the 775 mark. I wouldn't count 800. It's more of a psychological number than a technical one. So above 775, in all probability, the closing could well be above that. Volumes also picking up. Don't be surprised to see a move continue to 815 and perhaps even 845 kind of levels. So if you have a position, continue to hold. If not, then you could still get in for the targets mentioned. Keep a stop loss around the 760 mark.
Right. Okay. Aditya, quickly, within the BFSI pack, we've seen life insurers do really well over the last couple of months. They've really outperformed. warranted? That's the first part of my question. The second part, if so, what names would you at this point recommend?
Harsh, we've seen life insurance going pretty well. We've seen the last quarter HDFC Life's figures, HDFC Life figures were really very good. And that's the sunshine sector. That sector will continue to do exceptionally well. We've seen LIC in the race to buy Manipal Signa within the life insurance space as well, which will diversify LIC into health plus life insurance as composite licenses are being given out. From my perspective, I am bullish on the entire sector per se. My number one pick will continue to remain HDFC Life in this space. It's really very aggressive on their growth prospects. It has already undergone a little bit of time correction, and now the stock is ready to move on from there. So the sector is really very good to invest. HDFC Life and ICICI Life will continue to remain profits.
Okay, thanks for those views, Aditya. We'll let you go on that note. Kush, please stay with us. We're going to slip into a very short break. On the other side, we'll get your top BTST ideas and we'll talk more. We'll give you a bull versus bear case. So stay tuned. He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Welcome back. You're watching India Market Close here on NDTV Profit. Time for our bull versus bear segment, and Vodafone Idea is the one we've tried to kind of highlight today. The government's decided to convert debt of around 36,000 crore into equity, post which now Vodafone Idea's shareholding is, the government shareholding in Vodafone Idea, beg your pardon, is now nearly 50%. Stock is up 19%. Somit's here joining us with a deep dive on whether this aid is enough. Somit.
Well, yes, Vodafone Idea is definitely up today. It's up around 25%, in fact, at one point of time. Now, firstly, if you look at the bull point for Vodafone Idea coming in, is the fact that there has been continuous government support for the sector and for the company, which also means that tariff hike going forward could be relatively easy for the players. But on the flip side, there have been multiple such supports and multiple such tariff hikes. Despite that, there have been no meaningful improvement in Vodafone Idea's financial. In fact, there have been 3 tariff hikes from 2019 till now and 2 debt conversion that the government has done. Despite this, the company is continuously reporting losses. In fact, if you look at the last 13 quarters, the company has reported losses of nearly 95,000 crore rupees. Now, secondly, if you look at on the bull side, this debt conversion implies that the company has to not pay any spectrum dues for at least the next 2 years, that is till FY27. So not much this improves the cash flow situation of the company. But on the flip side, this conversion does not include the AGI dues, which is close to 16,500 crore rupees per annum basis, and this will start from FY26. Now, this amount of 16,500 crore rupees is much higher compared to the annual cash EBITDA, which stands at around 10 to 11,000 crore rupees for the company, which also means that Vodafone Idea is still not out of the woods, and there could be some more requirement of such kind of conversion going forward. Now, this conversion of equity, this lowers the company's overall debt seen by a scenario by around 18%, given the fact that around 36,950 crore of this debt is been converted into equity. But because of this, there is a huge dilution for the existing minority shareholders, and also the promoter holding drops to 25.5%, which also indicates that the skin in the game for the promoter is now lowering, and it now stands at just 25.5%, while the government, which is just a shareholder in the company, is holding around 49% stake in the company. Now, because of this conversion, because of this debt conversion, there's a high possibility that the company might be able to do the bank debt raise that it was looking to do for the last 1 year. It aims to raise close to 25,000 crore rupees of debt, which will aid the company's capital expenditure plans of 55,000 crore rupees till FY27. So that is the much needed relief coming in for the company, because in past the company has not been able to do much of capital expenditure as against its peer, which could now change going forward. However, despite this, the company has been seeing continuous subscriber losses. Now, if I give you some numbers here for the customer losses that the company has seen from 2018 till now, they have lost nearly 22 crore of subscribers. That is nearly 56% of the customer base that they had back in FY18, while the market share has come down by nearly 24 percentage points. So that's a huge loss that the company has been seeing, and how the company tries to arrest this will be something important to track going forward.
In fact, Sumit, that was going to be my question to you. What does Vodafone do to maintain or improve market share?
Well, capital expenditure is something that they need to do, because if you remember, they are the last to start the 5G service in the country, while Airtel and Jio started this service at least 18 months back. And this was also one of the reasons why the company has been losing subscribers and market share, because I guess our telecom analyst on the show today was mentioning, when a 2G subscriber of Vodafone Idea wants to upgrade, they look at Airtel and Jio and not at Vodafone Idea. And that is largely because the company has not done their capital expenditure. The 4G network is not that good. In fact, 5G is recently started, and that was one of the major reasons why the company has been continuously seeing subscriber losses.
And Somit, sorry, if I can chime in here. Somit, so what does this mean from a debt perspective? On the one hand, you're saying that this 36,000 crore converted to equity is positive, and on the other, we're saying that there is another 50,000 crore of debt in the pipeline which is required. Does this only create a larger drag? Does this only accentuate the pain?
Well, it does. In fact, this is just a short-term relief that the company has been getting. Now, if you remember, when the company had done a rights issue of around 25,000 crore rupees 3 years back, that time also they had clearly mentioned that there won't be any fund requirement going forward and things will improve going forward. But that did not happen. Post that, there was another fundraise of 20,000 crore rupees. Then there was a conversion of debt into equity, of government debt into equity. Despite all these situations, that all this fundraise and conversion of debt and tariff hikes that we have seen for Vodafone Idea, the financial situation has still not improved for the company, and one of the major reasons here has been customer losses. If you look at the last 13 quarters, they have reported losses of nearly 95,000 crore rupees, despite all these positive announcements that we have seen so far during the years. So it is just a short-term relief, and things actually need to change within the company for any major financial benefit to come in for Vodafone Idea going forward. And one of the biggest thing that needs to change for Vodafone Idea is to stop the customer losses that they have been continuously seeing.
Point taken, Swami. Thank you so much for that very detailed breakdown and those candid answers. But let me take it across to Amrish Baliga as well, joining us now this afternoon, independent market analyst. Amrish, your take with regard to everything that's happening Vodafone.
See, I've been maintaining all through. I mean, this was my feel in the last 2 to 3 years that the government cannot afford to let Vodafone Idea go under. I mean, that way they will anyway lose the spectrum dues which are there. Along with that, they'll lose the AGR dues. The banking sector will see the NPAs moving up. Employment issues will come up because they are employing a huge number of people directly as well as indirectly in the ecosystem. And also, the government doesn't want duopoly in the sector because telecom inflation is the last thing they would look at. So I think it was more of a government's problem than the promoter's problem. So government has, I think, resolved that to a certain extent as of now. But from an investor's perspective, it was a question of survivability of Vodafone Idea, which is now confirmed. But the next question is, when will it be profitable? I mean, we don't know. I mean, it could take the next 5 years, it could take 10 years. So, I mean, for the time being, the problem has been resolved. It will survive. But will it become investors' sort of a favorite stock? I doubt it, at least in the foreseeable future. Because with this inflow, your equity should be what, about 90,000 crores or maybe more, maybe about 1 lakh crores. I mean, when do they at least even show a decent amount of profits? So that's a big question mark. So with this, possibly we could see the stock going to about 11, 12 rupees because the government is investing at 10, which is still at a premium to the current market price despite this move. But beyond 11, 12 rupees, I doubt whether this stock can really move up too much.
You buy this, Ambrish, or do you invest in Airtel or Indus Towers? If you had to put money in telecom?
No, see, I mean, if you're a short-term player, playing for this...
you, Ambrish Baliga, you.
I would not. I would prefer to invest in a Bharti Airtel as compared to a Vodafone.
Okay.
As in, yeah.
Okay, fair call. Yeah, that's the answer that I was looking for. Okay, fair point. The other one is HAL, of course. It's cooled off quite significantly from the levels that it was trading at. It started off about 7-8% higher, now just about 1.3%. Ambrish Baliga, any thoughts here? Large order win. Sajid says that as per the management commentary, one more such order coming in the next 2 months. So the order booking is not a problem. Are valuations a problem? It's rallied quite a bit in the last 1 month.
No, more than valuation, the other issue which I've been talking about as far as defense companies are concerned, and especially HAL, is the execution issues. I mean, here for a very important component, they're dependent on a third party who again is not too sure of the supplies, although they have confirmed that they will supply. So I think that's the bigger problem than anything else. And because of execution, we could see HAL suffering going ahead. So after this sort of a bump up which you have seen, which has been more than about 35% bump up in the recent past, I think it's a good time to at least book out to a certain extent, remain in cash as far as HAL is concerned. Because I think you'll surely get, levels, at least lower levels to get in again. Because at these levels, I'm finding it expensive.
Okay, Ambrish, just taking a step back in telecom, Indus Towers, would that at all be a bet? Because Citi making a case that dividend distribution will go up, survival of Vodafone now a better probability than was earlier. Would Indus Towers be a good play?
Yeah, I mean, although it's already moved, but yes, I think it can still go further from here because clearly survivability of Vodafone was important for Indus Towers. So since that is confirmed, yes, sentimentally, it should be positive for Indus.
Okay, all right. But what would you be happy to bet on in Indus Towers again, Ambrish?
I mean, I would possibly wait for a correction to buy into Indus Towers. I mean, it'll be on my buy list, but at these levels, I'll not buy. Because, see, I mean, when you're playing on sentiments, you have to be a trader than an investor.
Okay. Point taken. All right. Now, let's quickly take it across. The government's decision to help out Vodafone Idea, another major player, Indus Towers, of course, benefits. Citi has already maintained its buy rating on an Indus Towers, target price being 470. Mahima is here to take us through that report of Citi.
Right. So, Harsh, as you rightly mentioned, Citi has, its
opened a 90-day catalyst watch on Indus Tower. What they've done is they've maintained buy with a target price of 470, and this is an upside 90-day catalyst watch. What they're saying is that they see overall a resumption of dividend payouts, and they expect firm, that is Indus Towers, to progress by Vodafone Idea on completion of its debt raise. In terms of their expectations on CAGR, they are expecting Indus Tower to deliver a core EBITDA CAGR of 10%, and this will be underpinned by a tenancy CAGR of around 8%. And lastly, the stock's implied dividend yield of 5 to 7% is something that presents a compelling investment opportunity as per Citi. So they've opened a 90-day catalyst watch, and these are the reasons as to why they've maintained buy for Indus Towers.
Okay. In fact, we also, thank you so much for that, Mahima. First off, we also spoke to Balaji Subramanian, who is the Vice President of Research at IIFL Securities, and he tracks Telecom, of course, closely. And let's listen into what he feels with regard to everything that's playing out in this particular situation with regard to Vodafone. He also explains why the company needs to stop the continuous consumer losses. Listen in.
So, the way I look at it is that as far as Vodafone's 4G and 5G networks are concerned, they have a long way to go before they catch up with their peers. So I think the first milestone for the company would be to stem the subscriber loss that they have been witnessing, for the last 5-6 years. So once that comes in, it also boils down to the success ratio in converting their existing 2G users into 4G, because one of the key challenges for this company has been that since their 4G footprint has been significantly lower in terms of population coverage, their existing 2G users, when they want to upgrade, they end up moving out to one of their competitors. So that is something which the company will have to work upon, and for that they will have to quickly roll out the 4G network, especially on the coverage side. Once that happens, we will see that their revenue starts going up. And the good thing about this industry is that it's a high fixed cost business. So when the revenue starts going up, the incremental margin on those revenues would be around 60-65%. So my sense is that from the cash EBITDA of around 10,000 crores annualized that they are doing today, in the next 2 to 3 years, that can probably move up to 15,000-16,000 crores. So that's a decent increase from where they are today. But as I said, their payments to the government are much higher.
Okay. Now, focusing on some other stocks, and while we're talking about sudden spikes on the upside, I think there has been a slide in Titan which has been further. It's probably hit a 1-year low now, Titan, trading at 2983. Not the best of grounds today. Kush Bora, how bad do the charts look here?
Yeah, not too pretty as you would guess, right? I mean, the recent low that the stock had made was close to this 3,000 mark, 2996 to be precise. 2996 to be precise. It's broken that as well. Won't be surprised to see slight further by at least about 100 points or so to 2890 thereabouts once that is taken out, perhaps even 2775 kind of levels on the cards. The more concerning factor for me is that the fact that the volumes on the way down haven't really abated at all. In fact, last week, if you saw, when the markets were recovering, reviving, and going into those excesses, the volume on the way down for this one had actually spiked up. So that's suggesting that perhaps the near-term pressure, despite it being on a 52-week low, hasn't really come off. So for me, this is actually a good shorting candidate if someone wants to consider a positional short bet then for levels of 27.75 with a stop loss around the 3100 mark. This can still be considered as a short trade.
Okay, so that's on Titan. Now let's talk about a stock which is doing well. Kush, Coromandel International.
Did your team give you a heads up, or did this just pop up on your list? Because this also happens to be my BTSC call for today. The targets on this one are actually 2050 and 2080. Believe you me, in the last 15 minutes, the stock actually spiked up about 2% and come very close to that second target of 2080. So if someone wants to consider, then they can consider it for levels of 2100 and higher, and you might want to now revise that stop loss to about 2050 kind of levels. The strength has been there in the stock for the last week, week or 7 to 10 odd sessions where the accumulation was very clearly on the cards. And today in a market like this, it's given that breakout. So for levels of 2100 and higher, you could still consider Coromandel as the BTST idea, or maybe even a slightly more longer bit.
Okay, so that's the BTST idea as well taken out. Let's quickly look at the auto space though. Royal Enfield blockbuster March sales up 30% on a YOY basis, accompanied by Mahindra & Mahindra, which has also witnessed strong growth in the tractor segment. Puneet joining us now to walk us through what the numbers look like and what's the quick thought with regard to each of those. Puneet.
Well, thanks for that. It's actually been a very positive surprise, if I can just summarize that in terms of auto sales, and maybe that's analyst just being conservative, but at least it's 6 companies are reported out of the 10 listed entities, and all 6 have actually met analyst estimates. So when you look at Eicher Motors, as you rightly mentioned, crossed the 1 lakh sales mark, growth of 34%, expectation was of 23% growth, and this is the first time in its history that Eicher Motors has crossed 10 lakh units sold in one fiscal year, which is FY25. So definitely a big positive there. Apart from that, we've seen TVS also growing much ahead of analyst estimates. Were of about 11% growth, that's come in at 17. So another big quarter there. Mahindra & Mahindra, bang in line with estimates, but it's a strong 18% growth for the company on the passenger vehicle side. While you can see Maruti Suzuki as well, that's just a tad bit disappointing. And while it was baked in, it's coming lower than estimates. So I think there's just a slight miss there at 1.92 lakh units. That's a 3% growth. M&M on the tractor side, it's again grown a very strong, a healthy 34%. Versus estimates of about 23%. So again, a big hit there. And Escorts is grown by about 15% in this particular month. The estimates were of that level itself. So finally, just on Ashok Leyland, it's a very big positive surprise for Ashok Leyland. Flat sales were estimated. It's coming at 24,000 units. Is the highest over the last 11 months that it's done. And for Ashok Leyland specifically, the MHCV bus side has grown 25% in this particular month, and that's what's led the growth volume, while the MHCV truck has also performed well, 7% growth in the MHCV truck side, and VCV is another one, an 8% growth. Estimates were a flat for this particular month for the commercial vehicle makers, but it's a big positive at the end for something like a VCV as well. And I just want to mention a couple of honorable mentions. So as to SML Isuzu was the one, 24% growth, stocks up 7%, and Atul Auto, it's a 18% growth that the company is reported, and it's a stock price movement of 12%. So all automakers up until now doing very well. I think it's the weak ones that are still left, if I can name it, that Tata Motors, Bajaj Auto, Hyundai. It's nothing great expected in terms of numbers for them, but we'll watch out for those numbers either today or tomorrow as well.
Okay, thank you so much for that breakdown, Puneet. Ambarish, let me come straight to you with regard to how these numbers look and what should the bets be at this point. How would you angle your bets given the macro as well as the way in which the numbers are starting to shape up?
I think one should still be looking at the passenger vehicle side of that market, and I expect that growth to continue. I think quite a few of them are surprised in March, and especially something like a Mahindra & Mahindra, where we have seen that Thar, Scorpio, and XUV 700 sales have been extremely good. And going ahead, I think in the current year, we will also see the XEV sales, moving up, looking at the sort of order book position which they have. So Mahindra & Mahindra would surely be one of our bets in this segment.
Okay, GST data for the month of March flashing at the bottom of your screen, up 10% YOY, 1.96 lakh crore is that number. Looks fairly healthy in that sense, Neeraj.
10%?
Yes, that doesn't look bad.
Agreed.
And yeah, so possibly the positive in all the macro negative that we're seeing. But quickly on to our last minute buzzers, and let me bring in Kush for the first one. Kush, what about a green lamb? Last few minutes we've seen a bit of a spike on the stock price. Any views?
Not really. I mean, this is just a sharp move. Despite or rather, after the last 5 sessions was very sharp fall from 300 odd levels. For me, this is a avoid at the moment.
Okay, and so if not an Aztec Life, an All Cargo Logistics, a Lemon Tree, and all these three up anything between 6 to 8.5%.
Aztec looks good. There has been this base formation support zone near the 650 to about 660 mark. From there the stock has actually started to rebound today. The closing could well be above the 20-day moving average after a while now. So this is one stock that yes can be considered more from a positional bet rather than just the momentum trading because the RSI is now starting to pick up. So about levels of 750 and 775, and on the downside 695 is very safe stop loss.
Okay, Amrish, if I can come to you, microfinance, that's one pocket which everyone is eyeing. If there could be a recovery there, what would stocks on your list be like? How would they be skewed? Would you go for NBFCs? Would you go for something like a Bandhan? How would you play it?
No, I would surely go in for something like a small payment bank, like possibly a Bandhan. Basically because, the issue with microfinance as far as Bandhan is concerned happened much earlier than the rest of the market, and they have been able to possibly come out of that slightly faster than the rest. So at about 150 levels, Bandhan makes more sense than some of the other microfinance standalone companies.
Right, and anything within your pocket, your preferred pocket at this point, Amrish, if you were to pick one sector, one space that you're really liking?
One space which I've been liking for the past couple of months has been specialty chemicals, and at least over the next 2 to 3 quarters, I see a very decent revival as far as this space is concerned. So out there, I would surely look at something like a Deepak Nitrite, Vinati Organics, SRF. I think these are the couple of stocks which I would surely look to buy.
Off from the lows of the day is Deepak Nitrite. In fact, other stocks like Privi Speciality, etc. too have inched up a little bit. So, well, fairly interesting. At some point of time, yes, the uptick will come as well. Very quickly, Kush Bora, before we thank you and Amrish, the hotel stocks, Chalet, ITC, etc., all of them have gone up in trade. A word on Chalet maybe, the charts?
So, Neeraj, yes, you're right. Now what's happening is that consolidation is kicking in for a lot of these names. Chalet, if you see, especially is now hovering around the 200-day moving average, which is close to the 850 mark. The stock hovering around that. So a clean break above the 880 level will actually get in further momentum. If you have an existing position, no problem holding on to it. But for a fresh position, I would suggest for a breakout above the 880 mark. And for an existing position, the stop loss would be at the 815 mark.
Okay, thank you, Kush, Amrish, for joining us this afternoon, giving us all of those views and perspectives. We'll let both of you go. And now, just about a minute from close, let's quickly look at the Nifty 50 index and let's look at it intraday, because we've done a fair bit in trade today, especially from those highs. We're now sitting near close to the day's lows, maybe 50 points away from the day's lows. So around 340 is where we've settled, and at least for the predominant part of the day, we've been fairly range bound in that sense. I don't know positives, negatives, but that's how it's played out. What's not done well, let's pull up again intraday the Nifty Bank, because that's the one where there has been pressure, 1.4% lower. The other one, the Nifty IT index, 2.5% lower. And that's where the other pocket of pressure has come from, and the Nifty Pharma as well. So those are three pockets where which have dragged the index, in particular. And even within these, when you're looking at the heat map on the Nifty, you'll see that some heavyweights also have dragged the index by quite a bit. And let's zoom into a couple of those. And HDFC Bank, Bajaj Twins down anything between 2.5 to 3.5%. HDFC Bank down 3.2%. And then you also have a Reliance down 1.7%. So those are some places where there has been pain. And if we can pull up the sectoral heat map as well, we'll likely see that FMCG also hasn't had the best day, down nearly 1% thereabouts. Private banks are the other pocket which is down. PSU banks, a UCO bank, a Punjab and Sindh bank, we've seen plenty of pain in those couple of names as well within the PSU banking pack. So banks and financials in particular, realty within the broader markets are some of the other pockets of pain. But what's done decently well is the broader markets. And let's first pull up the advanced decline on the NSE, and what we'll see likely is positive. There you go. And nearly 1:2 in that sense, where advances have outstripped declines. And that's the one key positive, that the breadth of the market has been fairly good today. The Nifty Midcap Index, while in the negative, just about 1%. So it's in some form outperformed the Nifty 50. The Nifty Small Cap as well doing exactly that, 0.5% thereabouts lower on the Nifty Small Cap. Let's quickly cap it off with the BSE 500 top gainers, top losers list. That's the list of names, many of which we've discussed on the show today. But those two names, UCO and Punjab and Sindh, very, very low float and very, very high volumes is what we've seen on both of those. And that's why the reaction in trade today. Maharashtra Scooters and InfoEdge, some of those names also sitting at the bottom. Restaurants brands was up nearly 7% as well. So some names that we'll take home today and probably look at. But let's quickly also look at what to watch out for tomorrow, because that's everything in trade today. There's Japanese unemployment, and then you have Chinese manufacturing PMI. Just some things that we'll want to look out for. Dividend announcements, record dates for those coming through, and MSTC 4.5 rupees a share, Realtel Corp 1 rupee dividend. So those also will come through likely tomorrow. But with that, completely out of time on this edition of India Market Close. From Neeraj, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side. He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is, actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Welcome, you're watching Market Express and I'm your host Himakshi Bahuguna. Now let's get straight to the show. Viewers, benchmarks indices kickstart FY26 week lower. Stocks see a sell-off ahead of Donald Trump's lead tariff kick in tomorrow. The Nifty falls 360 points to end below 23,200 levels and Sensex crashes over 1,000 points to end above 76,000 level. Now broader markets fare in tandem. All sectoral indices barring media index end with cuts. Realty index cracks the most, down over 3%, followed by IT, consumer durables, pharma, private banks and metals. Automakers close sales for March 2025 on a mixed note. Two-wheeler maker Bajaj Auto registers 93% year-on-year growth in EV sales for March. On the other hand, Ola Electric registers 56% fall in sales. Now, the company benefited from pre-buy under FAME 2 scheme in March 2024. Hero MotoCorp sales jumped 95%. M&M Tractors March sales jumped 34% year-on-year. Real estate sector is one of the top laggards today. The Maharashtra government has hiked the FY26 ready reckoner rates to 4.39% effective today. Now, ready reckoner rates are the minimum property value set by the state government for a specific area, used as a benchmark for calculating taxes and fees related to property transactions, such as stamp duty and registration fees. The last time ready reckoner rates were hiked was in 2022 to 2023 by average of 5%. Now, this move will increase property cost and increase stamp duty charges for buyers. Additionally, it will also escalate construction costs, in return impacting affordable housing. The government steps in to resolve AGR dues for Vodafone Idea. The government will be raising stake in Vodafone to 48.99%. The government will convert spectrum dues worth 36,950 crore rupees into equity. The conversion will happen at a face value of 10 rupees versus current market price of 6.8 rupees. Vodafone Idea to issue 3,695 crore shares to government. Now, this will take the stake to 49% from 22.6% currently. The conversion implies no spectrum dues for 2 years and debt slashed by 18%. The conversion will aid planned capex of 55,000 crore rupees till FY27. Suzlon stock price falls on concerns befalling its order book. Now, the company over the weekend notified exchanges about order cancellations of 300 megawatt. This development shrinks the company's wind turbine generator segment order book and could have a negative financial impact also of 1,800 crore rupees as per the NDTV Profit calculations. Suzlon cancelled orders as the companies decide not to proceed with the projects. Jeffries reiterates a buy on GMR airports with a target of 92 rupees. Tariff order issued for FY25 to FY29 on GMR's Delhi airport. The yield per passenger is up 148%. The increase will take effect from April 16, 2025 with a further possibility for midterm tariff increase. HAL stocks jumps after 2 mega orders worth 62,700 crore rupees from the Defence Ministry. Now, the contracts is for supply of 156 light combat helicopters Prachand. This order marks the single biggest procurement by Ministry of Defence from HAL till date. The supply of the orders shall commence from third year and will be spread over next 5 years. EMS companies are in focus today. The cabinet approves electric component manufacturing PLI scheme at outlay of 22,919 crore rupees. Now, the key beneficiaries are Dixon Tech, Keynes Tech, Amber Enterprises, Syrma, and they are buzzing on the government's move. Dixon benefits from its investment in camera or display modules. Amber and Syrma gain from bare PCB component PLI. Tata Group's retail arm Trent is one of the top gainers on the Nifty today. The company's store addition remains healthy. The company operates 248 West Side and 757 Zudio stores by Q4 of FY25. Elara maintains buy on the stock with target of 8,300 rupees, hails the company's strongest expansion in last 6 quarters. ONGC Green is targeting EBITDA of 6,000 crore rupees by 2030, says CEO and ED Sanjay Kumar Mazumdar. While speaking to NDTV Profit, he also highlighted how the acquisition of INR Renewables will aid the company's capacity and labor expansion plan. The most sought after question remains that will ONGC list the green arm separately? JP Morgan maintains overweight stance on LIC with a target of 1,115 rupees. JP Morgan sees implications from potential acquisition of health insurer. The brokerage feels the size of Manipal Cigna acquisition looks relatively small. The material value addition from acquisition may take a few years. JTL Industries records highest ever volume of 3.9 lakh million ton in FY25. The FY25 sales volume jumps 13%. Meanwhile, the FY25 export volume moved to 33,700 million tons, contributing approximately 9% to total sales. Citi continues to assign a low probability to a scenario of the US imposing tariffs on Indian pharma. It is analyzing the worst case scenario tariff of 10% if imposed. Companies with high exposure like Zydus, Dr. Reddy's or Aurobindo Pharma could take a 9 to 12% EBITDA hit. Now, this would reduce to 5 to 6% if part of the tariffs is passed on to buyers. Full pass through is tough. Now, companies with exposures like Torrent, Sun Divis could take a hit of 1 to 3%. Morgan Stanley maintains equal weight on SBI cards with a target of 685 rupees. The company's February spend market share flat month on month at 15.7%. The spend in February declined 9.7% month on month versus 9.2% decline for industry. Now, the market share in the number of credit cards in force was 18.9%. Antique maintains a buy on Aditya Birla Real Estate with a target of 3,448 rupees. Antique says that the divestment of paper business is a step towards stronger growth. The company remains the top realty pick on the back of reallocation of capital from a low-growth business to high-growth business. Royal Enfield has created history as they've clocked 1 million unit sales for the very first time in FY25, accounting for a growth of 11% year-on-year. India sales rose to 8%, while the exports have surged to 37%. Steel strip stock is trading higher after on company's March business update, which showed healthy improvement compared to the same period last year. The company registers highest ever monthly sales in March, jumping 27% year-on-year. Reported a net turnover of 433.7 crore rupees in March 2025. GST collections for the month of March is out. Now, the GST Council mops up 1.96 lakh crore rupees in the month of March, up around 10% against the previous year. Monthly total GST collections rise up to 7%. Newgen Software jumps on the company's arm, signing 2 statement of work agreements with the customer. The combined value of these agreements is $1.75 million. Both contracts are scheduled for completion within a span of 5 years. In a bid to ease burden for consumers, the Indian Oil Corporation has cut the aviation turbine fuel price by 5,870 rupees per kiloliter to 89,441 per kiloliter in Delhi. Now, additionally, the IOC has cut 19 kg of LPG cylinder price by 41 rupees to 1,762 rupees in Delhi. APL Apollo reported a record-breaking sale of volume of 8,50,447 tons in the fourth quarter of FY25, marking the highest ever in the company's history. Now, this figure represents a significant increase from 8,28,200 tons in quarter 3 of FY25 and 6,78,556 tons in quarter 4 of FY24. Construction major L&T bags another order in the range of 2,500 to 5,000 crore rupees. The company is going to set up 765 kV of gas insulated substation in India. Now, this is in addition to 380 kV of overhead lines in Saudi Arabia. The company receives tourney orders of gas insulated substations in UAE and Qatar. Used car marketplace Spinny has secured $131 million in a funding round led by Axel Leaders Fund, marking a significant boost for the fast-growing platform. The round includes $110 million in primary funding and $21 million in secondary transactions, facilitating ESOP buybacks and early investor exits. Now, Axel Leaders contributed $75 million, while Elevation Capital, Tiger Global, Fundamental and other existing investors participated in the round. Popular snack and sweets company Haldiram has secured 2 new investors, Alpha Wave Global and International Holding Company. as part of its ongoing equity financing round. Now, this investment actually further strengthens the company's financial position as it pushes forward with its expansion plans, particularly in the US and the Middle East. Glenmark Pharmaceuticals has announced that its USA-based subsidiary Glenmark Pharmaceutical Inc. USA has launched vancomycin hydrochloride for injection USP. Now, vancomycin injection is used alone or in the combination with other medications to treat certain serious infections such as endocarditis, which is an infection of the heart lining and walls, and peritonitis, inflammation of the lining of the abdomen, and infections of the lungs, skin, blood, and bones. Apple has now started working on revamping its health app with all the new health coaching features. Now it is powered by Project Mulberry. Currently, Apple devices track health metrics, which includes blood oxygen levels. Apple will bring in its integrated health app using AI provide insights into a person's health data. Influencer Kusha Kapila's shapewear brand Underneath has secured funding from Fireside Ventures, where the Mama Earth co-founder Ghazal Alag also joining as an investor. Underneath, which went live on March 30th, and is to begin to carve out a space in the category that has until now remained largely untapped in India. A Bitcoin investor who bought a SpaceX flight for himself and 3 polar explorers has made history. On Monday night, Chun Wang and his crew lifted off from NASA's Kennedy Space Center, becoming the first humans to orbit both the North and South Poles in a single mission. SpaceX Falcon rocket propelled them southward after the Atlantic, placing them on a trajectory never attempted before in over 6 decades of human spaceflight. SoftBank Group is planning to secure a $16.5 billion loan to fund its artificial intelligence investments in the United States. Now, this is as per a report from Bloomberg. So, FT Bank is exploring ways to finance the $500 billion AI infrastructure project in the US, Stargate, a joint venture between OpenAI, SoftBank, Oracle, and Emirati state-owned investment firm MGX Fund. OpenAI says that the company would raise up to $40 billion in a new funding round led by SoftBank Group at $300 billion valuation to advance AI research, expand its computational infrastructure, and enhance its tools. The Japanese tech investment group said in a statement that it has agreed to fund OpenAI with $10 billion in mid-April and an additional $30 billion in December, contingent on the AI firm transitioning for profit by the end of the year. HCL Tech announced the launch of a new dedicated US subsidiary, HCL Tech Public Sector Solutions, that is the PSS, to provide services to state and local government entities, educational institutions, as well as federal, civilian, and defense agencies. Now, the subsidiary falls under the strategic segments business led by Arjun Sethi. As Chief Growth Officer, Sethi will head PSS as the president. Chilean President Gabriel Boric Font meets India's leaders at the start of his state visit to India, reaffirming the commitment to strengthening bilateral ties. Now, the Chilean president thanks PM Modi for his interest in bilateral cooperation and said that India can count on Chile as their partner. Home Minister Amit Shah inaugurated Bharat Pol in 2024. Now, total Interpol published 208, out of which 276 were trap and disproportionate assets case. In 2024, 208 Interpol notices were issued, whereas 502 corruption cases were registered in 2024. 111 officers were transferred. President Murmu was speaking at the RBI 90th commemoration event in Mumbai. Now, she spoke highly of the Reserve Bank of India for being the center of India's growth story. She also said that RBI has guided the country from a poverty-stricken nation to one of the top economies of the world. At the same event, RBI Governor Sanjay Malhotra says that RBI's role has now grown beyond the initial mandate. He also said that he will continue supporting technology and innovation. He highlighted the central bank's role in fostering consumer protection and its collaboration with all stakeholders. The Bruhat Bengaluru Mahanagar Palika has made it compulsory for all property owners to contribute towards waste management. With fees collected alongside property tax, now the solid waste management fee is determined by the built-up area of the residential properties, 10 rupees per month up to 600 square feet, 50 rupees per month from 600 to 1,000 square feet, and 150 rupees per month from 2,000 to 3,000 square feet. 200 rupees per month for 3,000 to 4,000 square feet, whereas 400 rupees per month above 4,000 square feet. Thawarchand Gehlot, Governor of Karnataka, reserved the state government mining tax bill and has referred to the President of India for approval. The objective of the bill appears to transgress the other constitutional limitations and provisions. Now, Governor further added and said that objective of the bill also calculated to adversely affect the legitimate interest of other state or its people. The proposed bill is estimated to earn Karnataka a revenue of 4,713 crore rupees. China kicks off military drills near the border of Taiwan. With this exercise, they aim to showcase threat to Taiwan. Its army, navy and rocket forces launched a joint exercise off the coast of Taiwan in what it described as a stern warning against forces looking to undermine peace in the Taiwan Strait. Myanmar earthquake death toll surpasses 2,000. More than 3,900 people were injured. Taiwan declares a week of national mourning and directed that national flags will fly at half-mast until April 6 in sympathy for the loss of the life and damages. According to AFP, people camped out in the street across Mandalay for a third successive night because they were either unable to return to their ruined homes or were nervous about the repeated aftershocks that rattled the city over the weekend. Mumbai Indians defeated Kolkata Knight Riders while playing at Wankhede Stadium in Mumbai. Now, Mumbai Indians were on the point with their bowling effort as they restricted the visitors. 116 Mumbai chased down in the score in 12 overs, winning the game by 8 wickets. Indian hockey player Vandana Kataria has announced her retirement. Former hockey, she was most capped Indian player, making appearance in 320 games, securing 158 goals. Now, the 32-year-old star announced her retirement today. Now, with that, viewers, it's a wrap on Market Express, but stay tuned to NDTV Profit as there's more lined up ahead.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
you really know the company you invest in?
What is the real picture behind presentations and claims?
Is the outlook as rosy as the company claims? Know your company,
Powered by NDTV Profit Research,
shines a light on the biggest
stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is, actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Do you really know the company you invest in?
What is the real picture behind presentations and claims?
Is the outlook as rosy as the company claims? Know your company,
Powered by NDTV Profit Research,
shines a light on the biggest
stock market movers.
Headlines you start your
Note facing sharp declines. Investor sentiment takes a hit as markets brace for the highly anticipated Trump-led tariffs which have fueled uncertainty. The Nifty closes below the 23,200 mark while the Sensex plunged over 1,000 points, settling above 76,100. Property transactions in Maharashtra expected to become more expensive as the state government announces an increase in ready reckoner rates following a 2-year gap. Real estate experts say that this hike is likely to make home buying costlier. March auto sales, a mixed bag as Maruti Suzuki sees a modest 3% year-on-year growth, while Bajaj Auto accelerates with 93% surge in EV sales. Meanwhile, Eicher Motors makes history, crossing the 1 million unit sales milestone in March. Shares of Vodafone Idea jump 10% as the government's stake in the firm will more than double to almost 49%, as it is set to acquire shares in lieu of outstanding spectrum auction dues. The death toll from Myanmar's devastating earthquake climbs to over 2,000, with officials warning that the number could exceed 3,000 as rescue efforts continue. Good evening and welcome to Profit 360. I'm Sanjana, and over the next half an hour, we're going to bring you a complete rundown of today's market action, along with the latest national and international headlines that truly matter to you. So let's dive right into it. The Nifty and the Sensex closed lower today, with Nifty Realty emerging as the worst performing sectoral index, weighed down by declines in Godrej Properties and Prestige Estates. The broader market sentiment remained weak amid concerns over Trump-led tariffs and rising property valuation costs. Stay tuned as my colleague Harsh now brings us a detailed breakdown of all the market action today.
Well, pressure where the Nifty 50 is concerned in particular, but broader markets in that sense outperforming. But what's causing the pressure on the Nifty 50? Well, it was one HDFC Bank which pulled down single-handedly the index by nearly 100 points. You also saw pressure from some of the other heavyweights coming through, an ICICI Bank, an Infosys, a Reliance, all of them combined sitting in the red, and therefore you saw plenty of pressure from those stocks as well. What did well though? A Trent and IndusInd Bank sitting right at the top within the Nifty 50 basket, but when you're looking at the breadth on the Nifty 50, you had 4:1 sitting in declines, and therefore the breadth was extremely poor on the Nifty. But it was a day when broader markets showed some bit of resilience and outperformance. The breadth in broader markets was also much better than the Nifty. In fact, when you're looking at the NSE, the breadth was 2:1 in the green, and therefore in that sense the breadth was favorable. Among sectors, you had IT stocks down nearly 2.5%, the Nifty IT index. The Nifty Bank was down 1.5%, and you saw pressure on the Nifty Pharma as well. Those were the three top drags where the large caps is concerned, which is why you saw that pressure on the Nifty. What didn't do well even within broader markets was something like a Nifty Realty, which was down 3% plus. Nifty Media was one which stood out, with a PVR Inox really standing out in trade, a Dish TV also standing out. So some stocks within that pocket doing well. The Nifty PSU Bank had a couple of outliers, where a Punjab and Sindh Bank was down 20%, a UCO Bank was down 16%. Very, very thinly traded in terms of overall, in terms of free float, but very, very heavy volumes is what some of these stocks have seen, which is why you've seen that move on those stocks. Last off, I want to try and quickly zoom into the Nifty mid-cap and small cap, quickly look at the intraday graph. Overall, it was a fairly range-bound day of trade predominantly after that initial blip, but thereafter we've seen a steady market, both on the Nifty as well as the Nifty Bank, as well as the Nifty mid-cap and small cap indices. The small cap index saw a bit of variance, but outside of that, you saw pretty healthy and steady day through the day. 400 points nearly shaved off on the Nifty.
Thanks, Harsh, for that. And let's take a look at what's happening with regards to tariffs, because as the Liberation Day deadline for Trump's tariffs looms, Trump has made a very bold claim this morning that India, along with other US allies, may soon significantly lower its tariffs. Now, this announcement comes amidst heightened global trade tension and speculation about the potential economic ripple effects. The US president's remarks have obviously sparked discussions on how such tariff reductions could reshape international trade dynamics and strengthen alliances. So stay tuned for further developments as the deadline looms and approaches tomorrow. Meanwhile, Seth Freeman also highlighted the significant uncertainty caused by Trump's broad-based tariffs, warning that they could hinder US economic growth. He also pointed out how this lack of clarity is dampening consumer interest and complicating business planning.
Broad-based tariff across all kinds of countries, across different sectors of the economy, different core products, especially automobiles. He's very focused on that, and auto parts. We're hearing a lot about that. There is so much uncertainty that this really does, unfortunately or fortunately, require a sense of humor to deal with, because we don't really know what the impact is going to be. We have Goldman Sachs and a number of other investment banks giving pretty dire predictions, and it seems that one outcome that Trump may achieve through this is lower interest rates, because he may achieve such a slowdown in growth that the Fed will have to reduce interest rates.
Now let's take you to what's happening in Maharashtra, where if you imagine that property costs were causing a pain, here's some more information. Property costs are now set to rise in the state as the state government has increased the ready reckoner rate for the financial year by 4.39%. Now this comes below the initial speculation that had suggested a 10% hike. But before I get my colleague Anushi to explain the implications of this rate hike in detail, let me tell you what ready reckoner rate is. So this is basically the minimum value set by the government, or like a benchmark price for properties in a particular area. So this is used then to calculate stamp duty and registration charges. So now for clarity, let me quickly get in Anushi to explain to us the impact of this development, especially if you are a potential home buyer.
As you've mentioned that the ready reckoner rates, they have seen an increase in Mumbai, especially in the Maharashtra region. This is by 4.39% of an increase that we are looking at, and these rates effective would be from April 1 onwards. That's today onwards we'll be seeing this effective rates. Now, what was the initial speculation that there would be a 10% hike on these ready reckoner rates? Just for context, ready reckoner rates are benchmark rates which are set by the state government or the local authority for any property related transaction which take place. So this is the kind of minimum rate that is the expectation. So while the initial speculation was for a 20% hike, this compared to what has resulted is comparatively moderate. But what is still the implications of these higher rates is something that we should be focusing on. Firstly, increased property cost is something that we can see. Higher stamp duty charges for buyers along with higher construction cost is the result of these escalated rates is what we can look out for. But even though the stamp duty percentages have remained unchanged, what could be a potential impact is more on the affordable side of the segment rather than the luxury segment, because if you look at the buyer's interest in all that, it's the affordable which takes a huger hit compared when all these percentage change takes place. So that could be affordable side of the housing is something that we can see. Just to give a context on the revised rates across the regions, we are seeing rural areas the rate is about 3.36%, urban areas 3.29%, municipal council seeing 4.97%, and metropolitan municipalities excluding Mumbai is seeing 5.95% of rate effective. To give a context on which are some of these Mumbai-based real estate stocks, though these are on the luxury side of the developers that we are looking at, but just for the context in which are the players involved, we have the likes of Macrotech developers, Godrej Properties, Oberoi Realty, Ajmera Realty, along with something like Keystone Developers.
And we also caught up with Ashutosh Limaye, Regional Director at Anurag Group, to get his insights on whether the impact of the RRR hike could be most pronounced. So while he believes that property prices may remain largely stable, he pointed out that affordable housing could take a visible hit, potentially affecting both the demand and supply in the sector.
The overall impact, as I said, will not be significant, but for the affordable housing segment, where the buyers are sensitive to the total outflow they have to incur. I don't see property prices getting impacted because of the ready reckoner rate, because they were anyway higher than the ready reckoner rates. For affordable housing, which is typically 40 lakhs, 50 lakhs, up to 80 lakhs, in Mumbai's case, anything which is less than 1 crore, there the sensitivity is higher. But at the same time, other factors such as expected drop in the mortgage rates can balance this out in near future. There are cities which are at the cusp of becoming metros, cities like Nashik, Kolhapur, Solapur, Sambhajinagar, there the impact could be felt a little bit more because they are more price sensitive markets.
And now, quick update coming in. The net GST collection grew by 8.6% to 19.56 lakh crore rupees in just the concluded financial year FY25. This is according to the government data released today, of which central GST collection in the last year exceeded the revised estimates by 10% to 11.56 lakh.